Well, howdy, it's Webby again, and we have a special guest with us. And who is in the WRO family today? And who's here?
It's Matt Caruso.
What are you doing here, Matt?
Well, I have a special rule. When the guy who's put up the stuff on my wall behind me gives me a call and asks for a podcast, I have to say yes. So I'm
Oh,
I'm
I
here with
love,
great honor to chat with Mike Webster.
I love that. And those wall charts that you have behind you, man, it was so much fun. And that was a team effort of putting
Mhm.
those together. I worked on that with Charles Harris, and each year we'd do some work on it. And there's so much
Oh
information
yeah,
you can get from. I wish we would produce those again. It took so much work. And I mean, there was like a crew forever. There's so many things going on. So if anyone can find one on eBay or track it down, they are well worth it.
yeah.
So, with that said, some folks might not know you. So, why don't you tell everyone about yourself? You can start
Sure.
at where you were born, where you went to elementary school, or wherever you want to start.
I don't know if they want to go that far back, but I've been, it's funny now. I fell in love with trading. I always wanted to be in trading somehow. My dad, for years, worked at the phone company as a repairman. It was his like side passion was markets, and so even as a kid, we would drive down to Florida every year. And like the first stock I bought was 5 shares of Wendy's, and I think I was like 10 years old because we didn't have those. I'm in Canada. We didn't have those in Canada, so I said, "What's this great burger place?" So that was like the first stock I bought. Didn't do much, but it was interesting.
And
But
you
I,
were 10 years old?
yeah, yeah.
That's
So it
awesome.
was like an in trust thing. Like my parents had to buy it in trust to me, kind of thing, you know. So
Wow. So, how much was the commission on that? Must have eaten you guys up alive.
I don't remember now. I don't know if back then it was like you sent a check into the company. Like I don't remember how we did it, but
Okay.
probably something like that. It was like, well, I mean, wasn't I think it was 5 shares, so it wasn't like a big amount. It was like saved up confirmation money or something, you know. So yeah, that was like the first, but it was fun because then as a kid, it's like back then you go into the paper and it's like each week you'd like almost like track your sports team, see how did you do if it was up or down and all that, which was a lot of fun.
Yeah, some of the new folks now probably don't even remember that experience of going to the newspaper and tracking down and looking and seeing like, okay, well, what was the high and the low? And how often as a kid would you do that? Would it be like on a weekend thing, or were you obsessed
Yeah.
on a daily or
No, no, it was so like every weekend my dad would go to get like the paper and like here because again Canada they wouldn't like IBD wouldn't get delivered to the house like there wasn't that much circulation so we would go and get their IBD or a Barron's or a Wall Street Journal and then like I take a look while like in the process and then kind of go around doing whatever 10-year-olds do besides that kind of thing but that was like the weekly routine we'd have as when I was a kid.
cool? Well, I didn't mean to interrupt, but I'm just so curious. So how did the Wendy's trade turn out? Like, did you hold it for a long time? Was it a
Held it
little
for a
thing?
long time. And then after when I finally, so then, that was like, passive was nothing. And then after kind of getting old, I think it was to be 14 where I wanted, one day I was watching, I think CNBC with my dad again. And we used to watch like, Wall Street Week every week with Louis
Oh,
Rukeyser.
Louis Rukeyser, he was the
Yeah.
best, man. I loved
Every
him.
week. And there was, I forget which one, Paul Kangas was like a nightly show, a nightly business report. I forget which station. Anyways,
Yeah.
so it was great. Even Ralph Acampora was always on Louis Rukeyser. So I remember years later, I got to know Ralph because I was the president of the Canadian Society of Technical Analysts.
Oh,
Used to have
you
him as
got
a
to know. I
speaker.
never even met him, and he was.
One of
Oh,
the nicest, most genuine guys you'll ever meet. Super nice guy.
wow, I have to meet
I
him.
was I
He's a
was younger.
godfather, man. He is the
Yeah,
godfather of technical analysis, dude. You got.
yeah,
Oh, wow. Well, we'll have to circle back because I'll have
yeah,
questions about that. But go on. So you're 14, and
yeah.
I'll
So we're,
try
we're
not to
watching
interrupt.
CNBC one day, and Bill happened to be on CNBC. I think
Oh,
Kudlow and Kramer when he didn't have his own show yet, Kramer, and he was on. I'm like, I don't know who this guy is, but I just something about him sounded interesting. So like I had tried to read. Like my dad was like a Buffett guy like beforehand,
mhm.
kind of stuff. So I said, okay, we were together. I think he wanted to encourage me. Let's go get the book. So we went to a bookstore, which they don't really, it's not the same kind of process anymore. We went to go get the book and I was like floored. So I was like 14 and I went into full on like obsession with like William O'Neill and everything and like tracking all of that. And that was it. That was like, we ended up opening an account together, like after like maybe a year or so later. And, it was in my dad's name because I was under 18 for a little while. And then after we pooled our money together. My dad said, look, whatever you save up and you want to put I'll match you and we'll run it together. We still have
Wow.
that account today, all these years later. We still do it
Wow.
together, which is great.
That's
Yeah.
what a cool bonding experience
Oh,
with your
yeah.
pops, man.
Yeah. Yeah.
That is really neat. Oh, I remember when he was on the Kudlow and Kramer, yeah, because he was on there a few times, and Kudlow was so
Mhm.
kind to him. Oh, so was
Mhm.
Kramer, but Kudlow was just, spoke so highly of him, and one of the times he was on Kudlow and Kramer, I remember he was pissed because he did it remotely, and they had this light shining in on his eyes, and it was really
Okay.
bothering him. And I
Okay.
remember him telling me when he came back, there was like, well, they had this light on me, and but it was Bill didn't like doing TV too much because of,
Yeah.
it was like it's not like this show where we can just take it as long as we want or as long as we need to, or sometimes longer. But with that, it's like a little 2 minute soundbite, and what are you gonna, even if you get 2 minutes, like what can you say in 2 minutes?
It's like I was on, like, I've done some different things. I've been on IBD a lot. I've been on Charles Payne's show, Making Money with Charles Payne. And it's
Oh,
so,
he's
like, they call
cool.
you up, like, we want to talk about this topic. And yeah, it's a short. So, I mean, it's like, it's wonderful. It's great to be invited, but like, there's only so much you can get out about a topic in 1 or 2 minutes. And it's always topical of what's happening at that time. So there's those restrictions, but that's the game of media, right? It's the way it is. You try and bring as much value, but no, I can get it. So, yeah, so so Bill's book was next. And eventually the charting section, I guess, as a young guy, like, would attract, I think, most people when you start off, like the idea of, especially having just read Buffett stuff, seeing that like there was something beyond just trying to find value, but like there was a time to buy things that like just really spoke to me. And so I ended up going into this technical analysis, getting, I think, the first book I got was the classic Edwards and McGee,
Okay.
Technical Analysis of Stock Trends, 1948. So that was the original edition. I got, I think it was like 10th edition or something. And then that's why, then for a while, I kind of got sidelined away from Bill. I was like trading everything with charts. I got into futures. If you're 18 and you find out that there's like this massive, like 20-to-1 leverage in futures,
Yeah.
that's very attractive as an 18-year-old.
Yeah.
So I was, in class trading soybeans while I was doing my economics undergrad and all this kind of stuff.
Dude, you're so cool,
That
man.
was a
That's
lot of fun.
awesome.
Yeah.
So
Live cattle. Yeah.
did you trade a lot of commodities before you started doing more circling back to stocks?
Yeah, so then I got really into commodities for a while because of all the futures. I also, a lot of the work of Larry Williams I found really interesting. So I got into Larry Williams as well, and
Yeah, he's great.
a lot of the books in the 90s were from a lot of the commodities guys in the 80s. There was the Richard Dennis stuff and the Turtle Traders. There was so much around commodities, like when I was learning back then, all those books, that it just naturally pulled me into futures for a while. But eventually it's like, stocks spoke to me more. Like, so I ended up rounding back, and all that like experience, for good or for bad, was like when I got out of school, first job I got was like market maker, pro trader, which was great. I was actually the last hire ever at the firm, because after
Wow.
years later was the financial crisis. They eventually winded down the department and all. So I was like by far the youngest and the last hire for several years until they wound that up. But it was, it was
What
thanks to
year?
my
What
experience.
year was that you became a market maker?
So I was hired, was good timing, market timing. I was hired in the summer of 2007. And then I started, yeah. So I top tick. That's how I got into the industry.
No, it's hilarious,
And
dude.
my
I
first
love
day
it.
of trading was the first trading session after the new year. So like January '08 was my start professionally.
Oh my God.
Yeah.
Wow, dude. Well, you God, what a mess you got yourself into. What were you
Yeah.
thinking by June of that year? Like, like you're gonna go back to school and become a doctor or something? Or like,
Well, because it was market making, like all the stuff, like, like I kind of stopped all the bill stuff because eventually I did that as well at the firm. But like when I gained like some credibility that you can hold so much capital overnight and all the rest. But at first, because it was so short term, in a way, it protected me because, if you're in and out same day, it's not going to cause you any kind of
yeah.
trouble. And like the strong technical analysis background, it's like, you're going to identify that you're in a downtrend. But I'm someone who doesn't play the short side. So it's interesting. I always say, like, I had a good year that wasn't the blockbuster year, but I made good progress, and I traded the long side the whole year was like my
You made
process.
progress in '08 on the long side.
So this was
Wow.
pre HFTs, pre algos.
Hmm.
So, we had all the flow and spreads. And if you were nimble enough and really stayed on side with trend, you were able to I was still able to it wasn't, like I said, it wasn't banner year, but I still was able to make some good progress, which for '08 was, and also I think the, being naive enough to not understand the scope of what we were going through. Like, I mean, I remember it was like November '08 when I started to realize like, hey, maybe this is going to be pretty bad here. Because I remember my like, the head was in from Toronto at our desk. And I remember we did like a financing, the bank finance, I did whatever. They had to raise capital and it was at like bargain basement prices. And he was like, literally, like, I don't know if he had how many stock options he had as like a high level manager, but
Yeah.
he was seriously disappointed by the financing. I'm like, oh boy, I hope we don't lose our jobs here. But then things turned around. So
Wow, that is a fascinating time to
yeah,
have started. And what I mean, that's great because you started at the worst possible time. Like really
yeah,
the I mean, I guess the only thing worse would have been starting on October 31st, like the peak
yeah,
of '07, being your first day.
yeah,
But yeah, it did help being a market maker. Now, a lot of the people watching probably don't understand really what a market maker was. I mean, it's probably,
mhm,
substantially different now with as things have changed. But why don't you explain like what
sure,
your normal thing was? Because it was a different game back then, at least for
totally.
me, for being able to watch the level two in time and sales and watching what you guys were doing. It was really a big poker game. And I got quite good at it of like, you would show a bunch of shares, either on the bid to try to spook the thing up, or if you wanted the stock to come in, at least on my end, you might offer out like 10,000
Which
and have,
technically was not allowed, but
yeah, I know.
everyone did it. But
Well, you from us not being a
yeah,
market maker, I was legally allowed to because if I'm willing to sell the shares
yeah,
and show it, like I could
mhm,
tell the desk, we would have to call in to the desk and say, put a limit order 10,000 shares XYZ, and then you would say whether to show it or to hide it. And so if that
right.
they hit it, it would just show up on the level two as 100 shares, but they had all this behind it.
The
But
icebergs,
or you could put the full thing there with the intent of it. Your intent was to try to see. It was a poker game to see. You're,
totally.
you're bluffing, but it was real. So for us, it was legal. I just couldn't do, on both sides of it. But let's talk from your angle of being the
Mhm.
market maker. What was your typical day like, and walk through the mechanics of exactly what you did.
So it was now looking back, it was a really cool opportunity because like our desk was pretty lax. Like basically, if you weren't losing money, you had like overnight capital restrictions. Like also intraday, I mean, you had like some expectations, but if you were making money, no one ever really bothered you. If you weren't over like extremely over risk, or even if you were a little bit over capital, like risk at night, but you messaged why and the trade's going well, like they'd give you like space and all. So it was kind of like a twofold job. So we were the market making desk, but like as the young guy, the kid on the desk, like I initially you're not giving stocks of responsibility. So as a market maker, it's your job that there's always a good bid ask spread. Like now the machines have totally taken this over. So people don't realize that before, if there wasn't a market maker on stocks, like you could have, a stock could be bid $10, the offer could be 11.25. Like I mean,
Yeah.
wild spreads, and so it was your job you would have warnings and you'd have responsibilities, and you'd have to post a tighter spread depending on the stock price. And the benefit was that let's say there was someone like yourself putting 100,000 shares to buy. If you were the market maker to kind of reward market makers for doing this service, is that they would be able to participate. So if let's say I forget now even the percentage, but let's say 10,000 shares is sold on the bid. If you're the market maker, you have a right to take like a tenth of that, let's say, to buy alongside. So if you feel it's a good price and there's a big buyer, you can kind of join along. So yeah, there's some days people say, well, why would you want to tighten up the spread if you're losing money? It was the cost of doing business. Like there's times where you would get nailed and you'd adjust, but most of the time, eventually it worked in your favor. Like we weren't there for fun kind of thing. So that was the job. Like I only started to get stocks of responsibility after a couple of years in. So at first it was just about like show that you know how to trade, you know how to make money, and eventually it'll give you a couple of stocks. And the real money was in the trading, not even actually in the market making. So like that was kind of like just more of a necessity as like being on the post than something that was like your focus. So we were just really trading as much as we could intraday. And
How
but
much would
interesting.
you be holding overnight versus what you would be like? Let's just call it a round number that your capital is $1 million.
Mhm.
That how much intraday, what size would you get versus how much would you hold overnight?
So intraday you could do multiples. You could do probably like I don't know 5 to 10 times intraday if you want to. Again, as long as if you're not like overly like again, it was a lot of trust back then. You know what I mean? Like it it wasn't like a small firm, like, it's one of the biggest banks in Canada. And so like, your manager knew you. We weren't a crazy amount of people on the desk, so there was a trust factor there. And so like they got to know your trading habits. And sometimes you get a little bit extended or frustrated, but you could always ask friends to kind of help you out on the desk, which was amazing. Let's say you were buying and so you're not like artificially supporting the stock, but you don't want it to break a certain level, and you could tell there's a seller and you want some backup. Like you ask your buddy, saying like, I think it's a good price. Can you also put another 100,000 for me, please? So you would kind of try and like watch each other where you could, or you had a recon, like you said. If let's say someone like yourself was selling somewhere and it's an iceberg, let's say like you see only 1,000, so you go to buy it and you go to buy 10,000, you feel like, oh, someone's got a big order. It's like everyone on the desk would know instantly, like, hey, XYZ, there's this big seller at 19 and a quarter, let's say, kind of thing. And then we try and front run and or do all of our thing like around that. So what was really good about it is doing it to that detail, and it's unfortunately it's not around anymore, is that all the stock charts, especially the short-term patterns that you see, you understand why they work the way they work and like the dynamic that's happening like in the background. And I think the same dynamics still happen. It's very cut up now. So it's not like the big blocks, like I have 200,000 to buy, 200,000. It's going to be cut up and traded a million times. But at the end of the day, you end up at the same kind of demand supply balancing process. And so our job was really mostly taking spreads. But like I always had the Bill O'Neill in me because that's the first thing I learned. So when I liked the stock, I liked the story. It wasn't cups and handles and all the rest, but I would build into a core position. I try and keep that overnight whenever I thought the trend was going to roll for like a week or 2 or 3 weeks. And then all day kind of trade around it and like as aggressively as I could. So that's what we did for quite a while.
Well, you probably learned so many things that you don't even realize that you learned during that, of probably a lot to do with how an open happens, a gap open works, or gap up or down. So if you are trying to relay that information to someone who's new to trading, maybe in the first like 3 years of it, what information that is still relevant now, because people don't realize how much things changed from back then to now with algos, high frequency trading, and all the other issues, and why I have my thoughts on volume the way I do, which we won't get into today. But what things did you learn from there? Let's take a gap down specifically, like a non-earnings related gap down. What's really going on between the market makers, and what advice could you give to people that they could gain an edge from?
So you have to think that there's the different players that are involved, right? So there's the big institution where, let's say a stock's under accumulation, you can see that they're every day. Especially now it's harder, but you would see before that for a week someone's accumulating. So sometimes it's a really bad trader. They'd put the same size order every day, same time. It's like, okay, I guess he's back. And then he'd leave, he'd come back after lunch, he'd put the order back. It was like so blatantly obvious before. It was ridiculous, but like at the opens, and so at first it's like you're just following, you're trying to understand, but eventually you're putting in these strategies yourself. And I can see the algos doing the same thing. So if it's a stock under accumulation, I know like that guy who was going to show up at 9:45 to buy this stock, because he's bought it every day regardless of what the market's doing. He's just a buyer of size. And so if the market's opening lower, and so it could be headline XYZ, I don't PC, the CPI, whatever it is, and it doesn't really impact this stock. It's just down knee jerk because everyone. So there's the institutions that are just following the indexes. They're going to sell everything with the index, buy everything with the index. So the market's going to open lower because they're selling with the index. They're staying in line. Then all the short-term traders will kind of try and figure out which of these is now a short-term opportunity and start buying it up off the open. That's why the gap downs usually will revert, because they know Jim's going to show up at 9:45 with his 200,000 share buy order. So I'm going to get this open and I'm going to sell to him in about 15 to 20 minutes because he's been buying every day for the last 3 weeks. And so understanding that there's not this one boogeyman, there's the dynamic of all these people who have different time frames that are interacting, and they all have their responsibilities at the open, they have their responsibilities during the day. So it's very hard for people to visualize when they first kind of come to this, because it feels like there's one person, like, oh, they got my stops again, but it's an amalgamation of the open and the close are very important because there's all these balancing factors with funds, and they want to have rebalancing end of quarter, end of day. They want to have to buy so much stock. And at the open, there's the knee jerk of retail reacting to bad news, and then it's bought up. So opens and closes are very important for that reason. And trying to understand if a gap down happens, is this is it specific to the stock? Is it bad news? Is it because of the market? Has it been under steady accumulation for many days or weeks? And often that's where you kind of try and differentiate of, okay, this is a good opportunity on a gap down, or on a gap up, it's a good sell opportunity. And you try and judge that difference. And actually with time, I was running, like I eventually started running bill stuff. And like I kept losing money on breakouts, as like everyone does when you first kind of start applying this on scale. And I remember looking back and it's like, I'm buying these stocks at the same time I would normally be fading them as a market maker, like this big, nice gap up. And because I was just following the book as it was technically. And there's a lot of subtleties to Bill that you learn over time. Like he says, the buys are early in a bull market. And as someone who's novice, you try and run the same chart patterns on any stock at any time. And so you learn with time, like it should be a very high relative strength stock. It should be earlier in an uptrend. Typically, that's been my experience. So eventually, like understanding all of this, like that's how I start to kind of say, for me, Bill, this is the overall structure of how these stocks base and eventually move in their life cycle. But the timing of where to get in, like, why can't I use the skills that I've learned about like timing? Like my whole job as a market maker was timing 100 entries a day into a stock. Like, why not use those same kind of tactics? And that eventually kind of shifted me away from not the whole process, but like the actual time that I'm buying. It was kind of just trying to, as much as possible, be in line with the short-term swings, because they're so dramatic I find they've even gotten more dramatic as there's more retail and there's more aggressive machines.
Yeah.
So trying to understand that.
Wouldn't you say that now, I think that text reading algos are probably moving the market the most on an intraday basis, because it's like something hits, you see the spike, you can feel it, on the tape, you're looking at it, and then it's like, oh, and it's a nothing burger of a news item, and then it snaps back, or it just builds on itself because it was kind of like, okay, the market was already like a little tired, and then this really was a nothing burger of a news item, but it got enough momentum that the train kept on rolling on down. Or what's your take on the high frequency out, like the text reading algos now, in the impact on the market, or anything else that you see and how, and more importantly, how people could use that to their advantage, or look at it as noise, or what's your take?
Yeah, it's made it very difficult. And not only do they react quicker, I find the moves are more dramatic. Like you can, like, NBIS, we don't have to talk about current stocks, but it was strong this morning, and then they faded it down 7 or 8% only to come back up. Like, it's like the moves are so dramatic because the algos and HFTs have really consolidated with time. So if you think about like, when you start to look at the algos or the HFTs, they're not looking at the same things we're looking at, because they're so active on every stock. They have a fundamental view, like a snapshot of what the true liquidity is in the market, because they're the ones who are participating on every stock. So it's like, for example, like let's say before, like sometimes when I would trade a stock, I could be 40, 50% of the day's volume. It would be like a small cap stock. Yeah. So like, and I would be layered on all sides of the book, knowing like if I buy here to sell there, and the typical character and all the rest. So if someone looked at level 2, they'd say like, these are all the bids and offers. But if I were to cancel everything, like it would suddenly not be level 2 anymore, be a different ball game. So like, so back then,
like this spread,
exactly,
this,
right, and even everything behind, and you would see that sometimes, like at 4, someone would forget the GT, put a don't cancel order, and everything, the book would disappear at 4 o'clock. That's the way it was before. So all these algos and HFTs, like what we think is the book, like they have a grander view, because they have such scale, and with AI and all this kind of stuff, they can do it from a black box, that they have a really strong understanding of where the pockets of liquidity are. And like they have a depth of knowledge that we could never have even done as an individual, even if we were given the capital. They have such this dramatic view. So for me, it's more about what I've tried to kind of get to is just put myself in a position of strength when I start. And sometimes it means missing opportunities, but there's one indicator I found super helpful. I call it my FOMO indicator, where I look at the percentage of stocks above their own 5-day average.
Okay.
On the NASDAQ. So if like 85 or 80% of stocks are above their own 5-day average, so many people have done so much buying in the last few days, any little spark and stops will be hit like en masse, like across the market. So just understanding like where we're in those vulnerable points.
Do you use an exponential or a simple for that one?
It's simple.
Okay.
It's simple. Yeah. Actually, barchart.com is the one who compiles it. So they do it with a simple average. And so they have it for the S&P 500, the NASDAQ 100, the NASDAQ composite as a whole. And so just like giving myself that grace where the worst thing possible is like you put on a lot of exposure, then the market has a little bit of a trip, and your stocks are all down 7 or 8% on these aggressive growth names. So
Yeah.
trying to start at that position of strength where you can live through action and say, I'll see at 4 o'clock at the close whether I want to hold this overnight or not, is how I've adjusted over time.
When you were a market maker, and we'll move on from the market, but I'm just fascinated because I've never really had a conversation with a market maker about market making.
Mhm.
So, would you also participate in the pre-market and the after hours, or when it wasn't normal hours, you were just done?
So sometimes we would, but the Canadian markets were different. Like even today, like they open with an auction at 9:30, so which is a
Oh,
bit different from like the
didn't know that.
American markets. Yeah, so there's all this. So every again, where people think of like the New York Stock Exchange, but there's like so many sub electronic exchanges. So those came out. You could trade on the other exchanges, but it was much less liquid. So if let's say I already had a big position and the stock was trading up, and I want to let out a few, I would. But I was never a big pre-market trader, and there wasn't a big market there anyways. But the majority of my trading in a day, like P&L wise, like profit
Mhm.
or loss, would always like the first 45 minutes, like 80% of my day was done. Like there'd be
Okay.
so much volume, so much activity, like that swing off the open up or down. Like there's so much dramatic stuff that happened. That would always be the biggest part of my day. And then the rest of the day would be just, more like positioning, trying to like almost surveillance. Where's the buyer? Where's the seller? Trying to get into the right places and then respond from there. Like, but the majority of the action, because that's where everyone's reacting to the overnight gap. And that's where all the kind of the
Mhm.
fast moves happen. Then intraday, it's, if the algo comes into buy or the trader, it's like, slow and steady and you're kind of going with it. But the biggest swings where nobody really knows where we're going to go today is that 9:30 to 10:15. So I know some people refuse to trade that period, but for me, it's always been my most active period. So for me, it's normal to kind of react to the overnight situation.
Yeah, the first hour of trading, got a bad rap. Folks call it the amateur hour. And that just pisses me off, man, because I asked
Yeah.
Bill about that once, man, well over 20 years ago, because people were saying, oh, well, you're trading an amateur hour. I'm like, the chart says to trade. I'm trading it. And
Yeah.
so I asked Bill, I'm like, hey, Bill, what are your thoughts on trading the first hour? He's like, what does that matter? Like, if it should be, I was like, yeah, okay, same page. And never thought of it again, because it's like, if Bill said it was fine, and it's like, yeah, it's fine. It's fine with me. So for the first hour of trading, I always, even though really the first half an hour, 45 minutes, I'd always pay attention to what the high of the day was and the low, and try to
Yeah.
interpret the market psychology, even if I wasn't trading off of it, but interpreting it. Were you doing that back then? Like, was it a big deal, the open, the range for the first half an hour to hour, or is
Yeah.
that just me?
No, that was always important. And you always similar things. Again, a lot of our areas of focus were like precious metals, oil stocks in Canada. That was like, and also 2008, nine, like those were the big runners. Like if you look at a gold or oil stock from 2011, you'd think it's like a tech stock of today, the way they were acting. Um, but so you always want, so I always ran even the similar concept, like relative strength. If there was a group of stocks, like one thing I learned back then that's always still relevant. If there's a group of stocks, let's say gold miners or oil stocks, I always find you can do the deepest dive into fundamentals you want, but the stock that's hitting new highs first, even if it looks like it has worse assets, it
Yeah.
has poor earnings, like management's not, no one likes the management. If there's two oil companies and oil company B is at new highs before oil company A, that tends to persist the whole cycle. Like
Yep.
there's something about that stronger company that we just don't understand as like outsiders of the industry that the insiders get. Not even the insiders of the company, but just specialists of investors in that group. And that just continues to outperform. So like that, even for me, for relative strength, that's something that's always spoken to me with Bill's work, without Bill's work, is the one that's under accumulation just always tends to continue leading for whatever reason. We only find out later what it was. So that was a
Yeah.
key thing.
That was a big thing for him. And before I was ever at the firm, he had put in the Daily Graphs print book, which is now Market Surge Online. But he had in there the top five stocks by relative strength in that group. And then the two of us built on that, and we did a lot of other work that we would look at of within the sector, and what stocks were near new highs or hitting new highs, and in by sector which one had the most highs. So that would help you from a where in the market to play, and then within that sector which ones to go after. So I totally agree with you. It's always the market knows,
Yeah.
and it's that RS line as well as what you were saying, the hitting fresh highs, which they tend to coincide. So you were a market maker for a while.
Mhm.
Now, what was your next gig that you moved on from?
So they closed up the shop here after was it 5 years or 6 years I was with them. And then there's, if you want a job, there's other jobs in Toronto. I would have to move, which I didn't want to move at the time. I'm, very close with family and with my wife now. I was with her already for a few years before that happened. So we ended up, there was someone who was at the firm, ended up opening starting their own small broker dealer, so we ran the same kind of stuff. And I said, okay, maybe we'll build in here. We were going to do some high frequency trading. So we were going to
Mhm.
build. So basically what we were doing, it was becoming obvious, everything was going to become algorithmic. Let's build some HFT models to kind of really go at scale. So we tried to do that for about 2 years, and we just realized how outgunned we were. And
Yeah.
then being a small broker dealer, partners started to argue and fight and this and that. And just at a certain point, my good friend and I who went over, P&L wise, we were carrying things. So we're why are we, carrying this for somebody else? Let's just go on our own type of thing. So then
Okay.
we ended up, so that's what we ended up doing. So then I just traded for myself ever since. So I've just been, since that was maybe 2014 or so, 2015, I traded. And after, with time, as the algos and HFTs got stronger and stronger, there's a lot of cost to run that other stuff. I had direct market access and all the type of data. If you're day trading, commissions will become a serious check at the end of the year. The broker
Yeah.
really became your good friend and business partner. So and at the same time, you can never leave your desk. So I had kids, and it's you're trading nonstop. You can never even miss 10 minutes of a trading session, or you don't know what's going to happen. So
Yeah.
with time, as
Like a
capital
bathroom
builds,
break is like a vacation.
I'm telling you, it's you would run, right?
Yeah.
Remember when I started on the desk, no one would ever take lunch or anything. I'm like, oh, okay, I guess this is a no lunch type of place. And I realized why eventually. So then with time, just as capital build, I said, why not just, I always love the more of the mental game of position trading, finding winners and building into them. But you need more capital if you're going to make a living off of that, because the amount of turnover you can do with small capital with day trading. If I could have those kind of returns with a bigger account forever, it'd be move over Paul Tudor Jones. But
Yeah.
it's a different ball game when you're leaving and you're going to more liquid and longer time frames. The games change, kind of thing.
And
So
it's totally different holding overnight versus, if you're in bear markets, I will do a bunch of day trades, just because I'm a junkie, and it's a different mentality. It's actually easier emotionally because you're if it's a bad enough bear market and you're just supposed to be in cash, but you're sitting in front of your machine all day,
mhm.
and you're trading, like when I would do those days where I would just go home flat, you know um it's like, wow, you just sleep like a baby, man, because you wake up and you're like, okay, I'm in, but then when the
Yeah.
market's trending, you could never do that because then you're just missing that trend. But that's a whole another animal. So you've been trading like this, and I imagine, like it is with all of us, that you kind of go through different phases in trading. Like I'll go
Mm.
through more swing trading at times, or very heavy position trading, or vice versa. It really depends on the environment or all sorts of things. So for you, I would imagine you're much more of a position trader than a swing trader, wouldn't you say? Or do I
I
have that
am,
wrong?
because I think it's I exhausted myself from trading so much for so many years. People say, well, why don't you still day trade like before? I just I get, maybe the excitement's not there when you've done it nonstop for 10 or 15 years.
Yeah.
You just I just want to have positions. If not, I want to think about other things. I always have business ideas I'm working on or whatnot, just to kind of have a different interests. So I do much more position trading now, but it's kind of like a hybrid, because I'll trade it, I'll enter a swing trader essentially, but when the positions work, it's the holds become position trades.
Yeah.
So it's kind of like a hybrid type of system, but the aim is to kind of find those great companies that you can sit in for a few months at least. I'm not going to lie and say I'm trying to hold for 2 years. That's a hard hold for me, but my wheelhouse is usually that 3 to 5, 3 to 6 months is my preferred type of holding period if it works.
Yeah, and that's more the way Bill was. Like he wasn't, back when he did the pick and save and the price company back in the day, and he held for a
Mhm.
long period of time, or even the eBay that he did in '02. Those were rare. the later part of his career was all much more shorter. There wasn't a year. I remember a PM meeting that he brought us all into one time, and he said, not one of you. I've asked our accounting department to go through everyone's trades, and not one of you has ever had a long-term capital gain. And we're like, yeah, well, that's
Yeah.
that's the type of shop it was. Like we might hold things for months, but not for years. But that's how we operated. But everyone's a little bit different. But I did want to touch on the education stuff that you did and let people
Mhm.
know about that, because I think it's super cool. So kind of explain to people how you got into that and what that was all about.
So it's actually a funny story. So I was for the local chapter. There was the Canadian Society of Technical Analysts, which now they've joined with the CMT Association, which is Ralph Akampora's association. It used to be called the MTA.
The
And so I was
Godfather
running.
Association.
Sorry,
The Godfather
the
Association.
Godfather Association. Yeah. So I was running just like the Montreal meetup. It was kind of like an IBD meetup, essentially. I was running that in Montreal, but I was young, and so then with time, I said, when there was the opportunity to be there for all of Canada, I said, I'll do the job, So I was like, I think 22, 23, I was just like out of university, I started trading. And then it just so happened at the university I graduated from, we got a message saying someone was teaching like a class. There was like a technical analysis component. They're leaving. We're looking for someone else to fill the shoes. You could change the course if you want, but the CST, is there anyone you recommend? So I said, I'll do it. It's a local thing. So
That's
I
cool.
graduated the year before. And I already had my CMT though. I did my CMT while I was studying. And so then they said, okay. And so tell me, they're like, tell us a little more about yourself. So I'm like, well, I'm 23. And they're like, oh, well, is there someone else you'd like to do the course with, perhaps? So a good friend of mine, he was about 10 years older. And I don't know if he had his math. I know he had his CMT as well. So we ended up teaching it together. So I was 23 teaching like 22-year-olds in university, which was an interesting and fun thing.
What type of were you the cool professor, or were you the one who was like, "What? I don't want to listen to you," or a little bit of both?
So there's some students like I've met years later, like, oh, it was because I used to go there. The first semester I taught was during market hours because that's what was available, and my boss let me. He's like, I think it was between like 1 and 3, so I'd run out, and so I'd have my colleagues like call me up if I was getting fills. Like I would reduce orders, but in class
Dude,
I'd have to
that's
stop.
stressful, man.
It was very stressful, So, but I guess 23, you try and do everything, right? So I remember like taking, so like years later, people would be like, oh, it was so cool. You're taking orders in class and stuff, So that was a lot of fun. But I think I was a cool professor. I actually had a couple of friends who were like a grade or two younger than me in high school, ended up being in my class. So like they were kind of like asking what would be on the exam ahead of time. So I had to kind of like, I don't know, find a way to like not give away the exam, but not look like the uncool friend from high school type of thing. But it was fun. I did it for a number of years. So it was called Building a Profitable Trading System Using Technical Analysis. It's still being taught. It was the final year of a finance undergrad. It was one of the classes and one of the electives. And so I think now there's like 4 or 5 sections that are taught with it. And it's one of the popular courses in the school. It's still being taught. So that was a lot of fun.
When you were teaching, how many kids were in the class? Was it a big school?
So it grew. So at first it was like maybe 25. Like after a couple of years, like people liked it. We'd have like a few sections of like 80 plus students per class.
Wow,
so it got
that's
pretty,
awesome.
yeah.
So
really
you were
cool.
the cool professor then.
I guess, yeah.
Well, I thought of you when when my parents were watching the one of my WROs recently, or this weekend, actually Saturday, and they said, we'll skip the other part, but you really need to go online and get a master's and teach at a college, blah, 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 all nice, blah, 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 blahs. Just, and I was like, oh, I'd love to do that. I was like, oh, well, Matt did that. And so
Yeah.
I wanted to ask you, like, is that something and I would love to do that if I have the time at some point to do that. Probably since I don't have a master's, most places wouldn't let me, but if you want me, I'll do it. Would you ever go back and do that again? Because teaching is so rewarding.
It is. It's a lot of fun. That's why I built like my masterclass course. Like when I got some following after the US Investing Championship stuff. So I said, okay, I always like teaching. And I actually went back to like my classes. How can I take that, but add more to it and make it more towards like trading lessons versus an academic background. So I still genuinely still like teaching. And I do whenever I can. The only downside and why I stopped was one, it was time consideration.
Yeah.
Like I was really busy trading. And you had to get to the school and all that. It was tiring. But two, what started to frustrate me is out of a class of like 80, there'd probably be like 5 or 10 students who really loved it. And then there'd be 70 who would like after every exam or every kind of project come and like pester you for like, and the first time if someone says I had a B plus, if I had an A minus, I'd be able to get at this job. It's like, you said, okay, fine. We'll figure out something. And then like 5 friends would show up the next day, like, well, you just gave like Alyssa like an A minus when she had a B plus. Well, how come you don't do that for my grades? And it became like this big fight about grades and who can make it to the exam and the makeup. And it was just like, I don't have time for this, like it got frustrating. Like there, like the amount of people who really wanted to learn versus for how many people was an elective that it just had to get done. Like it wasn't a ratio that was a lot of fun for that.
I can see that. I mean, I can tell you now, if I became a professor, I would give everyone an A, because I would want them to learn. And I remember in school, it was all about like, what are you going to memorize for that test? And you're not thinking about learning, you're thinking about your grade. And I would want that pressure off of them and just say, okay, look, as long as you show up to class and you do your stuff, you're getting an A. But I want you to learn,
Yeah.
and then, and then see what happens. Human nature is what it is. But I do think in school, so much of it is so competitive that they're not trying to learn in general. They're trying to get an A, and the A minus instead of the B plus because, their GPA and all that stuff. And that's counterproductive. But okay, so then you did that for a while and you're trading, but why don't you tell everyone about the US Investing Championship and how you just kick butt, man? Like
that was
I'm so
great.
proud of you.
That was really
2020, was it?
2020, yeah.
Okay. So let's walk through that year and what you did and how you just hit it out of the park, man.
That was a lot of fun. So I'd seen it had kicked up again in 2019. And so I said, oh, man, I would have joined this year if I would have known. So then I signed up for 2020. And the year started off really well. I got InMode as a recent IPO. I had like a nice IPO
I remember
base. That. Yeah, that was like a nice rocket move up. But that's where one of my personal IPO rules came out because that had a massive move. And then by the time it faded, I got out. Like I gave up a lot of the profit. It was a concentrated position, so it would still move the account nicely. But now whenever I have an IPO that like will double very quickly out of the IPO, I just sell into strength. Because by the time a stop gets hit or the post IPO selling, the lockup expiry comes, like it ends up running into more trouble than it's worth in my experience.
So by selling, I didn't mean to interrupt you, but by selling into strength for folks because everyone has a different definition of that. For those IPOs, what signals was selling into strength, and how would you recognize that, and how would people listening, especially if they're on the newer side, learn how to do that?
So if there's an IPO basing structure, let's say there's a cup and the handle is at $55. It's hard. It's like there's no hard and fast rule. But once I'm at around a double, let's say there's a quick jump to 100 or 105, and you get one of those big up days like we had with ARM Holding. I did the same thing with ARM. I started building in the bottom of the base around 55, 58, and this was 2024, early 2024, I believe. And then they had like this good earnings and this rocketed to like 125. So I kind of sold that into strength, and it's not perfect. Like the next day, I think it leapt to 160. So you're looking there saying like, why did I sell? But then like months later was back at like 70, I don't know, $80, $90. And it ends up being so choppy that it's
that was super choppy, man.
Yeah.
That was a weird one.
Crazy, So whenever I do, so InMode, and after I went back, I studied some others. I just found that for a lot of IPOs, because something like a Google, like Bill did, like those are like the cream of the crop that kind of keep going. Like for so many, there's so much. Again, we were talking to the early conversation of there's different players in the market. Like a lot of people who have the stock from super cheap, like they don't care what the company's worth. Like they want to get themselves a really nice boat. They want to get a house. So the second they can sell their stock, it's like, wow, this is like I made it. So that wall of selling is like always around. So there's that initial stage where the amount of stocks so insiders are restricted from selling all their stock for a period of time. And so early when a stock lists, there's a low float. And so the stock can have a big move. But then a few months later, when the insiders can start selling, I found that it makes that like period of time very hard to hold on to a recent IPO. So that's a lesson I learned from InMode in early 2020 is that, was that 29? I'm getting mixed up, but I think it was 2020. Was that even though I kicked off the year nicely, I could have been much further ahead. But then after I was actually in Florida with my wife and my little boy, and COVID was kind of starting off. So I started to see like cluster distribution days. And back then my market tools were not as sophisticated as they are now. I've really built a lot on that given all the crazy markets we had. but that was enough to get me into cash like early on. Like think it was early Feb. Like the first COVID rumors came out like mid-January. There was like a hard snap that got me like mostly out of stocks. It had already been a good run, but then I got reinvested. And the second break was the one that really unfolded. So I was in cash. I remember being at the pool and like coming upstairs to like check the news, and like the Dow would be down like 8% or whatever it was.
Yeah.
And you know, like we were saying before, if you're in cash in a bear market, like every time the market's dropping, I mean, you feel sorry for everyone else, but it's almost as if like you're long in a great uptrend, because it's like I'm making up all this.
I thought I was the only one who felt that way. It's like, oh, I just made 8%. No, well, you were in cash, but you feel like you've made 8%.
It's amazing, yeah, right? Because the drops are, because the market will never go up typically by 8% in a day, but if you're in cash and the market's dropping like 8-9%, like that's always like an 08 for me. It's like, wow, this is amazing. The markets keep dropping. Like I'm in cash. It's like a great feeling. And so when we kind of hit bottom, and I just during that period, I've been studying a lot of Bill's stuff, but I was studying a lot of like Ray Dalio, and because my early days work was like trading gold miners and oil, I've always had a good macro background. I also studied economics in school and did my CFA, so always had a good view of like how everything comes together. And so I was really trying to understand like what are the key drivers of bull markets. Like there's a book that I loved, which was Marty Zweig's book, Winning on Wall Street. And I don't know if you remember that. I think it was from.
You mean this book?
That one right there. Yeah. So there's you know all of his monetary models.
And we didn't plan that, by the way. I just
we didn't. No, so I'm impressed that you had it on the desk.
That's actually the only book I have out right now. I'm rereading it because everyone got obsessed with the Zweig breath thrust, and it like hits all my OCD things of like how. And I love Zweig. Like I mean, he was, rest in peace. He was called the '87 crash. I mean, he was a client of Juan's, and you know, so smart. But the Zweig breath thrust, man, it's like, dude, like, no. But I'm gonna do a whole WRO on that. That's a topic for a different day. But I'm sorry, I didn't mean to get off. This is a great read from a great guy who just doesn't get talked about enough. And in his mind, you can just, by rereading it, because I hadn't read it since the 90s, and I was rereading it like that week that everyone was talking about his thrust, and I'm like, this guy is just a freaking genius, man. I'd forgotten how smart he was. I'm sorry.
He also created the put call ratio. That's Marty Zweig. He did a lot of like amazing work, you know.
Yeah. And the put to call used to work really, really well. I mean, I'll tell a brief story on that. That Bill and I used to use it like a lot, and Bill didn't have it on his machine for some reason, so he would call me up before he would come into the office when he was still at home, because he would trade the first few hours at home, and he'd call me up, Mike, what's the put to call at, you know, and we would watch it like a hawk. So then one day I did a huge, not one day, it took me months. I did a huge study, and I went back and I looked, because we were putting so much weight into it, and we were trying to figure out where the proper level was, the threshold. Because if folks don't know about it, he came up with it, and it was that ratio of puts to calls in when everyone's trying to buy insurance, you know, after the house is already on fire, it's over. Like that's the theory, you know, that buying more puts and calls. And back in the day, it worked brilliantly. Like it was one of the best things out there. Then it became pure noise. And I did deep dive into it, and I would pull up the chart on the day that it would hit a threshold, look at the chart as if I didn't know what would happen going forward. This is how people should do research, and then go out, see how it worked. And then I'd just have a pile of the ones that it was noise, the ones where it helped, the ones that it didn't. And I sat down and I shared the whole research with Bill, all of it, and that basically proved, like, there was no doubt in my mind that it was now noise. It used to be golden, it was now noise, just like what we were talking about with level 2 used to be great, now it's noise. That and I'm like, okay, well, this is something we're going to move on from. And this is hilarious. Like the very next day he calls me up, Mike, what's to put the call at? Like, well, I just wasted 3 months doing that research, and he still wants to know. But you know, old habits die hard. So I'm sorry, I went off on that. But
no worries. No, that's another thing. Like options market have changed so much,
right?
But see, this is why when you're using tools, and we'll get back to like the whole like 2020 bottom and all, but when you're using tools, as important as a tool is, you need to know the logic of why the guy who created that tool was using that tool in the first place. Because then if like, I still pretty much use everything Bill would talk about except the whole distribution day concept. Like I don't personally follow distribution days anymore. I found I tried for a long time. I was trying to force it. It was hurting me more than it was helping. So I moved, because again, I think markets have changed so much from when he wrote about it that I don't know if it's relevant anymore, in my opinion. That's
It's a big topic, but I'm on. Yeah. I mean, I don't want to hog it up, so I'll save that for another WRO. But yeah, we're on the same page.
Yeah.
So
2020. Yeah. So every year or every 6 months now, less with 1 month year old baby at home, but I always try and find.
Congrats, by the way.
Thank you.
That's wonderful.
Yeah.
Do you mind telling everyone the names of your beautiful children?
So Michael's my oldest.
Great name.
So Michael, Archangel Michael, that's what I said. That's why I picked him.
That's who I was named after. Yeah.
Oh, okay. Yeah. Then there's Thomas, after Thomas Jefferson, who's my all-time favorite politician and whatever. And the last one one was a religious, one was a political. The last one I picked Senna, for Ayrton Senna, the great F1 driver. So I said, if I ever have a little girl, I took the last name Senna and I called her Senna after Ayrton. So
that's awesome. Yeah. Was that the one where they did the movie about the guy, or
so
no?
There was a special on Netflix, like a 6-part series recently about him.
Yeah, I think.
Now there's a new F1 movie, which is not Senna, but he was one of the greats from the '90s. He died unfortunately there in a crash, but
that's a sad way. Well, congrats for being the most important thing in the world is being a father, and so
100%.
Congrats on 3xing that, man. That's some serious good margin you got going on.
Yeah, thank you.
Yeah. So we're now. I'm sorry. I will shut up. What the 2020 bottom and go on with your story, because
so every few months I try and find a topic that I try to kind of like deep dive into. So that era, I think I got Ray Dalio's book, the Principles, a little while back, and then I just kind of like wanted to understand his whole process and how he went about risk and macro, and he always talks about that. And so then Bill doesn't really get deeply into that, but Marty Zweig, like he had all of his stuff about the monetary indicators and all the rest. And I had done a lot of work because I was a market maker on a lot of gold stocks. I always knew the Fed very intimately because you had to, because it was the biggest driver of that group with gold. And so, like I'd just studied Marty Zweig like really deeply, like a couple of months before. And like, so all the different thresholds, he looks, if the Federal Reserve is cutting rates, if the prime rate is coming down, like all these liquidity tools, and again, that doesn't work the same like it used to, because the Fed came out with quantitative easing since then. So like Marty Zweig's model is not the same, but the core principles of how he was explaining why the market reacted to easing the way it did, like kind of made me to go back and try and build my own process. So when it was 2020 and like the Fed started to come out and it's like, we're going to be bringing, bank lending ratios down to zero. That was like one of Zweig's things. Then we're going to be cutting rates down to zero. That's another Marty Zweig thing. Then the government was going to start doing like they literally checked off everything possibly on the box of stimulus, and it was size like we never saw before. Like it was tremendous size. So what I kind of went to go back and kind of like Bill would do is I try and understand. I said, well, to me, this is like a wartime response by the government and all the rest. So I went back and I went to go study like Bethlehem Steel from like 1914. I have the big model book, stock book, and I was looking at the old charts from like Bill and all that. And so
that's
the first
one of my favorite moves, the Bethlehem Steel. It's a thing of beauty. High tide flag on top.
That Monogram Industries and Ascend Communications are my three. If I had to pick 3 stocks to grab, it's those 3, I think.
Well, so Monogram, what's interesting about that one, and that wasn't for folks who don't know, that was the toilets for jets.
Jet aircraft, yeah.
Yeah, and Bill would always say there's no such thing as a triple bottom. But look at Monogram's move. I think it was 68. That's a triple bottom, baby. Like it is what it is in Ascend. Oh my God. I wish we still have that in the database, because that move
was vertical.
Vertical, man. It was just like straight up. And there's so much to learn from that one. Bethlehem Steel was, since we don't have access to it, look at Axon in 0304, which is the same thing. It was the same exact move. But those were some monster stocks, man. Yeah. They really were. So go on. I'm sorry.
So that was like I said, I have to find the Bethlehem Steel of this scenario. And so there were some things like, like Zoom was very jumpy because people were already so the stock was very wild and it was hard to touch. Same with like the vaccine makers. They were kind of wild. But Livongo, which was diagnostics, like I remember reading into it, and they were just one of the first to come off the bottom, and it was like, obviously you're going to need like at a distance type of monitoring. Anyways, it all checked off all the boxes and was like breaking out of a double bottom with a handle, RS, and all the rest. The only frustrating thing is like my broker at the time, which was Interactive Brokers, wouldn't extend any margin on it. I guess the whole scenario, they were like unlocked. I mean, there's plenty of margin there. I guess because of COVID, they were on some kind of margin lockdown or whatever they were doing. So I had like a really good side, but that quadrupled like in 3 months, and that was
Yeah,
my
that was a
biggest position.
massive, dude. That was one of like a massive. Then didn't it have a big gap down at the end or something like that? Or am I getting that
No,
mixed
it
up with
gapped up
the?
because it was bought out by Teladoc.
Oh, it was the okay. And then did
So that
Teladoc have a big gap down afterwards? I'm trying to remember.
Fastly had a big gap
Oh,
down at
it's
some point,
Fastly. That's what
and
I'm
that one
thinking.
hurt me a few months later. We can get to
Yeah.
that story after, but so what I love about Livongo, for me, it was my most perfect trade of my career because
That's
I had my
awesome.
biggest size. I bought it at the start, and I literally sold it off the chart because on the day of the buyout, I sold it pre-market, then it opened lower, and then it never traded that high again. So I can literally say I sold it off the chart.
Dude, congrats,
So
man.
that for me, that was like my perfect trade.
That'll probably never happen again in life.
Never,
It happened
no.
once, man. That's all that
Yeah,
matters.
yeah.
That's freaking awesome. What a just dude, I'm so happy for you. I'm
Yeah.
so happy when
Thank
good
you.
things happen to good people, man. Because you put in
Thank
all
you.
the work, you knew exactly what you're doing, you weren't getting lucky, and you saw that that reaction and you knew what to do, man. Like, dude, man, congrats, man.
Yeah,
That,
yeah.
that's all. Well, that I know we're going to go through the rest of the year, but for folks, I think we're bearing the lead. Like, how much were you up that year? It was a monster move for you.
So it would have been so much better. But so if we continue the story, so at that
Sure.
point, I was rocking.
Okay.
And my second biggest position was Fastly, which again,
Okay.
I figured you play at home internet. Their biggest client was TikTok, which was 10% of their business, but
Oh,
TikTok
that's
was
right.
exploding onto the scene. So I had, at this point, I was full of confidence and I had really been building into Fastly and had a nice last leg up. So in September, it came out that I was first in the competition with like 480% or something. But by the time they reported in mid-month, I was already up like 650%, which was
Wow.
going great.
It's awesome.
And then that night that the standings came out, they said that they lost TikTok because of Trump pressure and this and that. It was like they started
Oh,
with the whole like China and all that kind of stuff.
yeah.
So it had like a massive gap down, and I had gotten sloppy with position sizing, so that knocked me down back to like a similar like up 400% or so. And so like what's frustrating was
Oh,
that then
up
after,
only 400%. I feel so bad for you.
but you know what? This is where percentage in dollars make a difference
Yeah.
because like for especially you're trading your own account with
Yeah.
size,
Yeah.
like that drop from six something to 400 like dollar wise
Yeah.
is like a dramatic impact. Like
Yeah.
it's all your capital, and so that kind of destabilized me for a while. Like the rest of my year. So I ended up was it third that year, I think. Because then the rest of the year, I just kind of like stumbled the ball. Like I did, then I was like, is this the market topping early? Are the leaders failing? And like my stops were too tight on new entries. Like I bought some Etsy and I would stop out, and I was like thrown from there. So I said, let me cool myself off, and I made some trades, but I didn't capture the winners because psychologically I needed to be on the bench a little bit after that hit.
I think you're exactly right of how that happens on those big years. Because then when it does curl on you, when your equity curve does curl for whatever reason,
Yeah,
and it always does, because when you're hot like that, that it doesn't last forever. And the most important thing to do for those listening that get in a situation like that where you're up hundreds of percent in a
yeah,
year, or whatever the amount is that's very important to you, is put lines in the sand. And what I would always do is, like, once I would get up over 100% in a year, which it doesn't happen all the time, but when it happens, you want to protect it. So then
yeah,
once I get to 120, I would say, I'm not going to allow, like, my hard stop now is 100 because I want to end the year at 100. And then if I'm fortunate enough from 120 to go up higher, then I keep ratcheting that up for that reason, because I've been in the same shoes as you before, when I just have a killer thing, and then for whatever reason, and it is typically for me, it's overconfidence and oversize. Like, when you're hitting
same.
it, you're like, oh, I'm the best trader that's ever lived, man. No one's better than me. I can do 200% long in this, or I can buy this
Yeah,
thing extended or whatever. And then you find out, well, no, you,
yeah,
you know, that stove is hot. And then when you lose a lot off the top, it's your confidence, more than anything. Once
yeah,
you've got to protect your confidence, because every time I lose my confidence, man, I cannot trade my way out of a paper bag to save my life. You get your confidence back, and then it just goes back to normal, however you are. I mean, what's your thought on that?
It could take you months to years, or some people never getting their confidence back. I know traders that were great, like at the
Yeah.
firm, that kind of blew out, and they never got their confidence back. And like I had a few shell shock, like that was one of them. Like after that, like it took me time to kind of recenter. Then we went to a bear market, like, and then which eventually in 2022, which like to kind of trade the same way. So it took months to kind of rebuild yourself in your mind, or restarting, like cool yourself off, because like the dollar figures are high swings. It's hard to kind of live with that sometimes. I agree. Like the hard part for me is like I agree with you saying like ratchet it up. But like let's say it's July and you hit your downside equity curve. Like do we not trade for the next 6 months? Like that's like then after it's like I end up getting pulled. It's hard to kind of stay away. That's one of the issues.
Well, I'll tell you in 07, the 8 time frame. So when you were starting your market making thing, so that 07
Mhm.
was a really good year for me, and I did that thing where I wanted it in the firm. I was up over 100%, and I wanted to keep it that way. And so then that became my floor. And there were a few other things that happened, and I put in my circuit breaker rules because I, like you, had a really bad gap down. It was Crocs, and I'm going to talk about that in
Oh
in
yeah,
a
and I
minute.
remember that gap down. That was awful.
Dude, oh my, it
It
was the
was huge.
worst trading day of my life. So very much
Yeah.
like you with the Fastly, I had a big monster position and earnings came out and it was gap down. I sold it in the, which I normally didn't do. And with the firm capital, I just sold it in after hours or pre-market, whenever the earnings came out, I think it was after hours, and just blew out the whole thing. I
Hmm.
was disgusted with myself because there were signs all over the place, and that's a big topic. But
Yeah.
it messed with my confidence. But I traded for another week, and I started doing crazy things, like trying to make it back. And I realized, what am I doing? Like, this
Yeah.
is stupid. And I think it was the best trading of my life from memory, and I could be totally off on the time frame, but I did not trade for 6 months. I didn't put on a trade in the firm. My own account, it was different, but in the firm, I didn't trade, and I came in every day with a ready list of everything. It wasn't like I went on vacation. I put in even
Yeah.
more work because I wanted to get it back, but I wanted a perfect fat pitch. At that time, we didn't know that 07 to 09 was going to happen
Yeah.
like that. It was just like another bear market. And I went 6 months, which I'd never done before, probably will never do again after, not trading, because I'm like, I had just had this great year. I don't want to like mess it up, because I've done that before where you're hot and then you mess it up. And yeah, like the confidence thing, when I've struggled, and I've had a lot of struggles in my career, and it's more than the capital, because you can always make it back.
Yeah.
It's that mental capital in the what it does to you, and what it's done to me is like, just, it's horrible. It is really horrible. So the solution for folks in that position is, let's say your account is $100. Let's just say your account
Mhm.
is $100, and you're feeling like that. Just take $95 out, put it in a savings account, in a CD or something like
Mhm.
that, and just trade with that $5, and just try to get your confidence back, and just
Yeah.
try to do the right thing. And then once you get your confidence back, you can slowly start journaling money over in from, don't keep it in the same account because you'd be too tempted to trade it. Put it in the other one and move it over. And some other advice for folks in a competition like what you were in,
Mhm.
if you were in it and you're up that much because of those swings with the dollar amount, just take out a bunch of money
Yeah.
when you're hot. I saw Charles Harris do that
Yeah.
in 99 or two, no, it must have been 2000. He just kept wiring money out of his own personal account because he recognized what was going on. And it was
Mhm.
the smartest thing I've ever seen anyone do in their career, even more so than things that I saw with Bill, was with Charles Harris. Just was self-aware enough to know that
It's amazing.
he was in a slump, and he just, man, dude, guys, he's one of the best traders ever, in my book, in a lot because of him doing that. So how did you regain your confidence after that gap down? And the gap down is, you did nothing wrong. It's like, That happens. It's just the way the market goes,
Yeah.
man.
I bought a little too extended. I was very concentrated, but at that point, it's like I was trying to win the competition, and like it's like you forget it's money, and you just want to win, and it was all this. And but what? One thing that helped me many years ago, and this is what I was fortunate to start on the trading desk, because I worked with like guys who were like more old school, like they were from the floor. It's like back then, it's like they looked down on guys with PhDs and stuff. It's like, nah, we just got in here, we started trading, we figured it out. And so in 2010 is when I had my first really good year at the firm, because I was doing like canned slim stuff. I caught Netflix, and I was marketing.
Ooh,
So I was like the young kid, and I was like all of a sudden like killing it,
good for you.
and which was great, which was a lot of fun. And then after 2011, it's like, again, then the gold stocks were hot, then gold things and things topped. And I started the cancel. So everything kind of topped at the same time. We went to chop. There was the summer and all that. There was the European debt crisis, the pigs and all that, like the
Oh,
Eurobonds
that's
in
right. Yeah.
2011. And so I went into drawdown. And I did the opposite mistakes of Charles. Like we used to have like a reserve where they take part of your gains, you put it in a reserve. So if ever you lost money, some came out of your reserve and the rest came from the firm. So they want you to always have like, money like into it yourself. So you're not going to get reckless. So I'd even bump that up because I wanted to trade bigger size. So I remember, so after being like a rock star in 2010, by late 2011, I remember my boss taking me, he was like, hey, look, like 2010 was 2010. He's like, you're losing money. You're taking away from the other traders and on the firm. He's like, turn it around or you're not going to be here anymore. It was like a tough talk, like I'm sure there was more grace, but like at the time I was like, holy, like, that's like, it was like a bit of like an eye opener. So then I went from trying to kind of make it back to being like almost gun shy.
Yeah.
And this is one of my good friends, Franco. He was the oldest guy on the desk. I was the youngest. We were both Italian. So we had like, we got along. We were like at the Italian section of the
Are
trading
you a good
department.
cook?
My wife is, so
Okay,
I'm a
because
good eater.
we'll have to talk later about like because I want to try to learn how to cook like an Italian, and
Oh, she's the one to talk to.
okay, I'll
Yeah.
have to meet her someday, and we'll have to
My
talk.
grandmother's been making like fresh bread since she's 7 years old, like actually in Italy. So she like, if you go to her place, like the best place you've ever been to. But
Oh, that's
yeah,
awesome.
yeah. So speaking with Franco, and it's like I was kind of like a little shell shocked at this point. Like it
Mhm.
wasn't disastrous, but like I didn't give back everything I made. But like when you're making a lot on the trading desks, like anything you give back now is like they don't care. Like this is a loss. Like they don't
Yeah.
want you losing that much money anymore. So I just kind of was freezing up. He's like, Matt, he's like, I don't care. He's like, if you trade 10 shares of something, 100 shares of something, he's like, figure out how much money like lost on a trade won't bother you, whether it's $20 or $50. He's like, and just trade until you get your confidence back. So I literally went from trading like all this size to like trading like 100 shares at a time of like a $5 stock, just day trading, getting myself back. And, bit by bit, like, and that eventually became a big part of my process. I call it the dollar stop. So every time I go into a trade, like how much percentages are how I plan things.
Hmm.
When I look at like what the loss will be, like what's the actual dollar hit? Because I always say like we study and plan in percentages, but we live our lives in dollars. So
Hmm.
it's like you can say whatever you want on paper. This is my stop and my equity curve. But at the end of the day, if you lost X amount of dollars, and to you that's a lot of money, like it won't matter percentage wise what it was anymore. You're going to start to like be upset with yourself, and then have all the psychological like hiccups that come with that. So I started to kind of build myself psychologically out of that. And about a year later, they closed the desk. But like thankfully by then, like I was back in the groove and things were going well. So which was important because then I had enough confidence and capital to actually kind of move on to like stage 2 and do something else like beyond the bank kind of thing. But that concept of like not stopping trading, but trading very small until I get my confidence back is something that I like still use to this day if I get into a slump of some kind.
I think that's great advice, and folks should rewind that and listen to that because I think that's going to be the best part of this is what you just said. And there's so
Yeah.
many gems in there. And I'll just add a few that, my take on that. First, you're a boss who came to you and had that, even if he was doing it nicely, that's a huge mistake because
Mhm.
when you manage PMs, that's the wrong way to manage PMs. The right way to manage PMs is tell them up front, look, here are the rules, and lay it out so they understand, like, okay, I think in the perfect scenario is like you're given X amount of money. If you lose X amount, we're going to take X amount away. You lose another X amount. Let's say you lose 10%, we're going to take
Mhm.
half away. You lose another 10%, we're going to take another half away. You lose another 10%, and you need to move on or something. So the person knows ahead of time. And if you're the top in the group for X amount of time, you get money flows in or money flows in. That's whole that's a separate topic, and there's a whole different way of doing it.
Mhm.
But I think anyone who was managing PMs and does it in that way, you're going to get the best out of your PMs, because it's all about psychology. And when you are trying to tell someone how to do something, man, they freeze up. They can't, like if you're getting a gunslinger and you're telling them like you can't do this, you can't do that, or if you lose any more money, we're going to do this. It's not it's
It's even
not
more
going to work.
pressure.
Say again.
It's even more pressure on you.
It's more pressure, and you
Yeah.
trying to get the person to do well. And I've just seen this. I've been seen it in all sorts of ways, and it's just like, man, there's so many easy ways to have a group of PMs do well, and it really starts at the top with the right direction and this clear direction, so you're never wondering, because there's so much wonder in the market. You don't know, is your stock going to gap up the next day on some news or gap
Mhm.
down?
Mhm.
And then if you're worried about your boss, it's that's a whole different thing. But your size thing of keeping it small, that's something that I learned from Marty Schwartz's book. And it actually came up.
Pitbull.
Yeah, Pitbull. I was talking to Joe Fahmy last night about it. We recorded one, and that came up in that book. If you remember, there was that time where he was in a slump and he got super small until he gained his confidence back. And when I read that in the 90s, I was like, wow, that is the way to do it. Now, I haven't always done that, but every time that
Mhm.
I've remember to get small until you build up your confidence. It really is a game changer. Um, so the solution to the thing that you were talking about with the dollars is to bring your account size. My answer for it, and it's just for me, is to bring your account size down where you can operate on a percent basis, and
Mhm.
the dollar amount doesn't matter to you. Because I'll tell you, Bill, on the tail end of his career, he would talk to all the PMs. He would only, bring us in a group when he was unhappy with us. He wouldn't be like, "Oh, let's have a meeting and tell you guys how good you are." It was like, when you're doing poorly, and that's fine, I get it.
Yeah.
And he would start talk. At first, it was about the percentage. You guys were all up X percent. Now you gave it all back. Now you're flat, or you're down 5% or something. And then it started turning into, it was post 0709, started turning into dollars. Like, you guys were up X millions, and now you've given it all back. And the dollar amount started messing with them, as it would mess with any human.
Mhm.
And so
Mhm.
that's why my solution for that is, okay, if the dollars are starting to mess with you, take that money and do what Charles did and just journal it over into a
Yeah.
savings account. That's just my 2 cents. What's your thought on that?
Yeah, I think you're doing it like the more scientific way. Again, like that's what was the desk. Like we had a fixed capital, so like, well, more or less, when you're in the slumps like that, it starts to get like pulled on you a bit. But like I agree, especially if you can't control yourself, which a lot of people at that point, you're emotionally fragile. So
Mm-hmm.
it's like never go grocery shopping when you're hungry, kind of thing. Like you kind of you avoid buying too many bags of chips. So
Dude, that's the perfect analogy. I'm stealing that, by the way. That is, I'm just giving you fair warning, brother.
it's
I'm
okay,
going to
Dave.
take
It's all
that. I
yours.
will credit you if I can remember it, but I don't always remember where I hear cool things. That is the coolest thing. Yeah, don't. Wow, I got to write that down. That is so good, man. So, what did you don't okay. I'm gonna that's gold.
Okay.
So then after that year was up and you had that in the books, what was the next year when you weren't, in that competition? Or maybe did you do the competition again the following year, or?
No, I didn't. It was 20. Then COVID was like wild. Well, first of all, the
Yeah.
market felt toppy. I didn't want to do
Yeah.
it. And like since then, I've had a couple of more kids. So it's just again when you're running at that extreme. Not that you wouldn't want to make those kind of returns, but like I live a very normal life. Like I've been with my not my wife, but I've been started dating her in 2002. So we've been together a while.
Wow. Congrats.
Yeah, thank you. So it's like I'm like very close with family and with the boys and all. So like when you're treating at that like level, like it's all encompassing. Like right now, I feel like I don't have the time and the emotional ability to kind of run at that kind of intense pace at that extreme. I plan to get there again in a couple of years, but so I haven't like kind of joined back since. But yeah, but I mean things have kind of moved on. Again, 2022 was a quiet year, but it was actually very good at one point. I had Mosaic, which was doing great with
Oh,
potash
nice.
and oil, and I had Devon Energy and all the rest. But then that kind of round tripped. I thought we were going to go on a more extended run because I thought, with the blockade of all the potash and all, but that kind of failed. Then there was nothing else that year, which was frustrating. So, but at least 2022 was slightly in the green, even though the markets were terrible. So you still like look back and feel good about that. But it took time though. Like after that kind of fastly hit, it does take time to kind of rebuild the psychology. I think that's where most people get hurt. Most people aren't able to kind of rebuild from after it happens to them. And I think the bull markets, I think the hardest thing about trading, like I always say, there's no one part about our business that's very hard to understand. Like you can explain what an RS line is, what a chart pattern. It's the putting it all together in a process that you can follow and that you won't break when the emotions come in. Because if you do it all right, you're going to hit a bull market where you're going to make a lot more money than you thought you would or could. And then that's going to set off a cascading series of problems that technically has nothing to do with. So like you don't have the emotional tools to deal with all the problems that are going to come with being successful at something, which is a really weird and ironic thing. But it takes a few cycles because your actual success will breed your downfall because it's going to make you break all of your rules. So I think so much of that is so important in the learning process, and that like each cycle, and I try and get better and better each cycle at it, and I try and put in more rules and more things to hold me back, but it's never easy, But
well, it'll never be easy. Well, speaking of process, that is one thing I wanted to talk to you about. So, walk me through. Well, we'll get into your process, but I want to know, like, what would you say is your edge as well as your weakness?
So I'll start with weakness, which I think it's a bit of a double-edged sword, and a part of this I'm gonna have to blame on Bill O'Neill. But all those beautiful charts at the beginning of his book, like up 900%, like
Yeah.
that so impacted me I guess at a young age that like 20 plus years later, I still like my goal of every cycle is to catch those with size. Like I try and trade less concentrated, but
I'm
I
not
didn't.
alone, is what you're saying.
Yeah, and what's great is like when it works well, there's like nothing like it. Like it's an amazing feeling that you nailed it and and it's work. But then there's like always like it'll work great, but there's a lot of stumbling blocks. Like if you're in a good trend and your stock has a bad move against you or it breaks or you change your opinion on it. Well, now you're in a good trend. All the stocks are out of position, and you have to find a way to kind of reposition, which is very difficult to do. So like it works great, but there's a lot of shortcuts. So some people will ask me, like, I have clients and all the rest, like, well, Matt, why do you differ the way you trade with weight? I said, first of all, most people won't be able to emotionally handle the kind of concentrate. This is as a result of 20 years of doing this. It'd be like me trying to get in a Formula One car and drive. It's like, you can tell me what to do, but I physically won't be able to handle it. It's only normal. And then two, there's all these drawbacks, which there are drawbacks. Sometimes like I'm in a concert and I'm like, why am I so concentrated when all these other stocks could have just easily filled the gap? I probably would have the same returns with like less volatility, less single stock risk. So that's like an emotional hangup that I have, which is I think is from knowing what's possible if you catch them just right with size. That's definitely my biggest drawback. So what was the good side about that question again, Mike? I jumped on the negative.
Yeah, no. So the polar opposite. So that was your weakness, and I have the same one, by the way, for the same reason. And what is your edge or your
Oh,
strength?
my edge. Yeah, I think my edge would be such a passion for this business that I've read so many different elements of like, and I've gone through so many different facets of this business as a market maker, position trader, trading gold names, knowing the economics knowledge, my CFA, having this broad breadth of knowledge, it allows me to adapt to a lot of situations. Like there's very little market wise that if news comes out that I can't understand the context and how the response should be or what's likely. Like also in terms of like with the recent, bombing of Iran and all that, like trying to understand the geopolitical play, like so much of that when I was trading gold was so critical along with monetary policy, like understanding the totality of the machine and how this all kind of comes together. I think it's one of my big strengths as a trader that I think maybe others don't have. And for me, being able to have that broad vision, but like, and also like a really good understanding of the different components, like not just surface level, just from like years of like relentless study. Like I say, that would be one of my edges that I have. And so sometimes it works out great, but then, like I said, if you're concentrating and it goes against you, all that goes out the window, and you say, why did I concentrate? But those are my pros and cons.
Well, knowing you and having listened to you, over the years, I would say that you're one of the few that have both a very micro because of your market making skills,
Mhm.
as well as your the macro that you do. I think better than so many people out there of understanding. Because I remember one time you were talking about the Fed and all the
Mhm.
movements, and you'd really done a deep dive. I don't remember when that was, but you really have that sense. But also, it's like you're smart enough to recognize that it doesn't matter. Like if then you've got this sense of what the Fed's doing and all the macro stuff, but the chart is doing something different. You're
Mhm.
not going to argue, and you're just going to go with what the market is actually telling you. So I'm thoroughly impressed by you,
Oh, thank you.
and how you handled. I think it's actually even it's the best thing that happened to you was the Fastly gap down.
Mhm.
And the same thing with me with like the Crocs, because then you know that stove is hot, and that's the difference
Yeah.
between someone who's 22 or 23 and starting off, or what, I don't want to
Yeah.
put an age on it, but you're starting off and you haven't gone through that yet. You could be
Yeah.
80, whatever,
Mhm.
that until you've had your head handed to you on
Yeah.
size and then had to live through that and fight your way back from that emotionally and financially, it's um, you're never the same. And
Yeah.
you're going to be better before that happens, frankly, because you're going to take
Mhm.
risk. Like you now aren't going to take that same risk that you did before that. Just like, I shouldn't, but I still take on a lot of risk at times. I trade concentrated. I'll do my
Yeah.
shotgun, but I also trade too concentrated. Anyway, I was I digress.
But
So
one
go
point to
ahead.
that, because
Yeah.
I remember when I started trading, because I was the youngest guy, there was
Yeah.
one guy who was older, and he always asked me, Matt, what are you doing? What are you doing? And I took it as a compliment. But then, like, years later, he told me, he's like, the reason I kept asking all the time is if there's a bull market starting, the guy who's going to make the most money is the one who's the least experienced, because he has like no fear of anything.
Yep.
So it's, and I think sometimes, younger guys, and I'm not that up there in age, but I feel older because of all the stress of all the
Yeah.
years of trading.
Yeah.
But if you're like 22, 23, that no fear works for you in the bull market. You're going
Yeah.
to make far more money, because even if you get sloppy, like all that stuff works to make more money for you,
Yeah.
and you pay the bill later, unfortunately.
Yeah.
So it's all part of the learning curve. I hear you. So it's a really odd business compared to other businesses when you get to the
It really is. It's
yeah.
the ups and the downs are it's fascinating, and how you deal with it. Everyone's going to have ups, everyone's going to have downs, and it's really how
Yeah.
you react to it that will make the difference. So now let's kind of step back and look at your process, because each
Mhm.
one of us has a different like process and a routine. And so, what is your normal routine on a daily basis, as well as on a weekend? How do you find stocks? What do you do?
So on a daily basis, I always have like a leader list, like a list of like maybe 80 stocks. Like these are like to me the best candidates in the market.
Okay.
And so I always have my positions, and then after it's really just like always sorting this list: best performers, worst performers. So I always want to know, like I've already done the work on the weekend of this list, who I want it to be in. We'll get to that in a second, but then like day by day, it's like, is there something I'm not missing? What's the theme? What's the trend? Why are these 6 stocks like leading the day? I always want to be on pulse. If you get the main theme wrong of a bull market, it's amazing. There could be a bull market, you'll probably make very little money, because like the stocks that you have aren't as strong. Subtract out all the chop that you get from like the mistakes, and you end up nowhere as the market's up like 25%, and you want to break your keyboard. So like I found that like you really want to be in the leaders. It's like such a key micro part, but incredibly vital part of like this like position trading process that you want to nail. So day to day is like trying to just get a pulse and like managing positions, and that's like my main day to day in terms of markets, which is pretty simple. And also just keeping track of news. Like I always wake up in the morning, like what are the macro things, like trying to get a sense of what is the key driver on a macro basis. So for me, like again, going back to the Fed and the liquidity, are we like on the upswing of this liquidity, or are we like on a downswing? And then that's like that'll determine if we're in a nice big bull market or a bear market. And then I have my technical tools to confirm that each day. So each day is following my watch lists during the day, staying in tune with news. At the end of the day, trying to understand if beneath the surface there's any distribution or not. So that it's like basically if we have a good up day, but if it's just Apple and Microsoft and whatever other stock, like maybe people are like piling into just these large cap names and they're selling everything else. Like if I'm underperforming suddenly and the market's still tracking up 2-3 days, like is this like a subtle like move into like the big cap names, trying to make sure I don't get caught in any of the extremes. And the weekend is where I'll go through all the different scans. I used to run different scans. With time, what I do now is I build a main list, like which takes many hours. But once it's up to date, most of my weekend scans are like, 3-month relative strength, because just like of this rally, who are the leaders of this rally? And then after some fundamental screens. But like most of my changes are like week to week, maybe a couple come in, a couple come out, are usually based around the 3-month RS to make sure I'm in tune with, like, again, the leading trend of this group. So that's like the majority of it. And that really keeps me pretty centered. It always makes sure, like, I have indicators for market trend. I have that FOMO indicator for short-term extensions to make sure I'm personally not getting like too much exposure too late in this bump up, or I'm not fearful now. Maybe I'm reacting to like a short-term pullback when it's at a key average. We've all made that mistake too. So just trying to balance my emotions and exposure levels and stay in tune with the market. And that's really like my day-to-day and week-to-week. So it's
Cool.
pretty
So how
consistent.
many, like, in a typical portfolio, how many stocks do you tend to have, and what is your typical guardrails of like your most concentrated position? Not the extremes that you might do on a special situation, but how does that work for
So
you?
usually, so like honest, like, so again, like, every you start to see your own structure with time. Usually like at the beginning of an uptrend, I get up to about 10, 11 stocks, 10, 12 stocks, and then it'll probably drop down to about 5 or 6.
Okay.
And like, maximum concentration is usually, like, again, except like sometimes you can get really heavy in a name that's working or whatever, but usually it's like about 30%, 25, 30% is where I get it up to. And then like I feel content if the stock has a good move and I have a 25 or 30. I feel like I did my job. If it
Hmm.
has a big move and I had like an 8% position, like I even though I caught it, I feel like I made a mistake, type of thing. So that's like I've tried more positions. I've tried like less, and then that starts to feel a little too concentrated, and more I feel a little bit like I don't have much of anything when things work. So that's what usually works for me, that 5 to 6, when I get to like comfortable with the different names.
And are you fine concentrating in the same theme, like a bunch of AI stocks, or do you try to, um, spread that out with different themes, or how do you look at concentration from a
Uh,
sector
That
level?
doesn't bother me personally, and sometimes it works against you. But like, I don't like I don't like diversification for the sake of diversification personally. Because again, like the stocks, it's all about, for me, in my opinion, like the key theme of that, the key stocks for that cycle, but also the key theme. So for me, 1 or 2 themes is enough. Even if it's like fully invested with margin, but it's like 2 main themes. Sometimes you're going to get, like when there was in January the DeepSeek like drop where they like
Mhm.
hammered all the AI stuff. Like sometimes it's going to hurt.
Yeah,
I found
that was
like
a one-off. I mean, that
it
was,
was a one-off,
yeah,
painful one-off, but
yeah.
like all of my best years is when like I've just, so there's like all the mediocre years, but the really, like, 2010 was really good, 2016 was amazing, and 2020 was like really good. Like those are like the 3 key, like the best, like, standout years. It was like caught the theme, caught the leaders, got size, and like really rode them. And it was like the massive returns came from that. So I guess once you have good experience, you try and keep replicating. So that's what I'm comfortable with. But again, as a market maker, I was always used to having, we were always gold and oil stocks. So like I'd be overnight with like everything in 3 or 4 names, or one. It was always 1 or 2 themes or 1 or 2 sectors. So for me, that was never like, the gap downs and ups were just kind of, you get used to it after a while to a certain extent. So, but again, what like you and I do, I think for most people is not the right thing to do. But which may seem like it may seem disingenuous, but I think it's like a real way to put it. Like I wouldn't try and copy what a military expert would try and do in combat. You know what I mean? Like he has different training than I do. Like
Yeah.
I don't think I can walk into a bar and stop a 10-man brawl just because I've seen someone else do it once or twice. So
Well, I go and tell everyone to be kind to each other. See how that works. That's probably what I would do, frankly.
uh,
So, so tactically speaking,
mhm.
when you enter a stock, what is your, kind of perfect setup? Like if let's say you'd gone to cash, the market is in a, you're in a bear market or a correction or something like that, and you're waiting for the turn. Well, let's talk about the market first. Like, what is your key? Let's say we're in a, 15% off the highs or more, clearly underneath the 21 day and underneath the 50-day, but still above the 200-day. So more of an intermediate correction than a bear market. What is your signal to get in, and how would you get back into the market?
So what I love is the relative strength during corrections. For me, that's like the go-to. I like the one that first out. Remember, I had Netflix in 2010, and the market made a major bottom in July, and then in September it went just slightly lower. No, sorry, in August it went a little bit lower, but September 1st was the follow-through day. But like Netflix had already made a massively higher low during all. Like in August, Netflix didn't follow the market basically on that second like lower, like hardly anything. It did its handle for its double bottom. And so that always stuck with me. So like basically, if we have, like I think Bill would always talk about, he would call like you put like point A and point B and say, look, the market went lower at point B than point A, but
It
the
was a
stock's
big
higher.
part of our process. Yeah.
So for me, that was, I used to call it AB relative strength. Now I call it, just divergence relative strength, because essentially you're looking at a divergence, but in terms of price, it's similar
And
type
that's
of
what he
concept.
would refer to it to as a
Oh,
positive
okay.
divergence.
Yeah, that's
It was
right.
just
Yeah.
the letters were what we marked on the charts just to make it
Okay.
easy to follow. But he would refer to it, and we would refer to it as positive divergence. And why don't you explain that again to people who maybe have never heard that concept of that with the positive divergence,
Sure.
because it's so important.
So technically, a lot of people will use it with oscillators, like momentum oscillators. They'll look to see if the price goes lower, but the momentum is not going lower. So it's like it's running out of steam. I don't like to use it that way. That's not my preferred way. I like to do it like Bill does it, where basically, let's say the market makes a low on July 1st, and by August 1st, it's 5% lower. So like we have a lower low, but if like the same stock over that period from July 1st, but on August 1st, that stock is maybe 5% higher, it never broke its prior low while the market did. So again, going back to like earlier discussions, there's so many different players in the system. That outperformance over a month where the market goes lower and the stock doesn't, there's only one reason that happens, is that somebody wants so much of that stock, because every time the market drops, by default, all the people who follow the index are selling their stock. Market makers, guys, we're just following flows. Like we don't really care. Like, if you're a market maker, you don't really care what the market, you just want to be in tune with trends. If the stock's not breaking lower after a month with the market going lower, that's because somebody is soaking up all of the sellers. And if you go back to all the great stocks, almost all of them will always show that like divergence relative strength during a correction. And so to me, that's like a massive tip off. Like I always say, if you won't go down when the market's going down, you're going to go up when the market goes up. And so for me, like one of my favorite things is when like trying to start to notice who's doing that during a market sell-off. It's tricky because sometimes in a market sell-off, it could be defensive names that are doing it. So like, let's say, I remember when I started with IBD type stuff in 03 and 04, I forget which stocks it was, but let's say, the market's weak and people are buying Coca-Cola for safety. So they say, okay, I guess Coca-Cola is a leader, but it's not the leader. It's just, they're just buying that because they didn't want to be invested in the broad market, and Coke is not going to fall as much or maybe even go up a couple of percent. So then you have to do that extra work. So of all the stocks that are showing this positive divergence, which of those are like an innovative new industries and new themes? And so these high tech names will always fall way more than the market. Like never mind match the market. They should, if the market falls 5%, they should be 20% lower, a lot of these names.
Mm-hmm.
So if they're higher, that's like a screaming amount of like accumulation that's going on in that stock. So for me, the way I always like to kind of get back into names is that on that, like as soon as the market shows some strength, then those first stocks that are not breaking down, and there's always going to be a few, and sometimes it could be tricky, but start like, putting maybe 5 to 10% of this name on at a proper buy point, 5 to 10% here, and start to see what sticks. And those first ones always end up being like the best overall, the one that works. Some will fail because again, you're trying to figure out, sometimes it could be, the natural gas stocks are holding well. Is that because Trump wants more like LNG to go to Europe? So you're trying to find the key themes, and sometimes it doesn't like follow through. In 2023, that was like a bit of a, I remember with EQT or whatever, it was like a false like leader signal for me. But if you can start finding those 2 or 3 stocks that are, and then you can concentrate in, those are almost always the leaders of that cycle. And then, then you have to be careful. There's earnings reports and all the rest that can sabotage all these plans, which is the most frustrating thing, because you look back, it's like I nailed the leader, and then earnings came out and just like killed the momentum on the stock, which is a bigger risk these days you have to account for. But that's my core. So when the market's selling off like aggressively, who's not breaking down? And then ideally they get tight. So like I know Bill would talk weekly, but even daily, you start to see very smaller ranges, like kind of like volumes start to compress. And that's like a really good sign that like things are just getting to an equilibrium and there's no more sellers. And so then the second the market comes up and those index buyers come back, think about, put yourself in the shoes of an institution. I just bought this stock for 3 weeks as the market's falling out of bed. when the market strengthens, do you think I'm going to give you that stock back at about the same price? No, you're going to have to pay me a lot more now if you want that stock back.
Mm-hmm.
So it gets quiet for a while as all the sellers got tired of selling and the buyer bought what he could. And then after, when the index buyers come back, they don't care if they pay higher because they're just trying to match the indexes. And then that starts to break the stock out of the pattern, and then we kind of start to go vertical. So that's like it's a bit of a word salad, and I can visualize it in my mind. I don't know if others can, but like that's the perfect setup coming out of a correction for me to find the best leaders.
So it wasn't a word salad. And all I thought of is while you were talking is everyone needs to go back and re-listen to that, several times, because what you said is exactly right. It's gold. It's how Bill would do things, how he taught us um, to do things. And it's so important. He used that in '09, and we were buying some really weird positions of things like you can go back and look at just about anything that we traded. And like Apple would be one. The chart was terrible, but it was a positive divergence
Yeah.
that was the key. And then back in '98, when he bought AOL and Schwab during the double bottom in the market where the Nasdaq had that double bottom, or you could call it three waves down, you could call both things. It was 33%. The AOL and the Schwab both held up on that second bottom, held up. And that's where he really made, I don't know if that was the most amount of money that he ever made, but probably was either that or Qualcomm, because he had piled
Mm-hmm.
into both of those and sold them exactly right. And it was all because of what you're saying, that the
Mm-hmm.
positive divergence, that is the biggest tell
Yeah.
out there, and people need to recognize it. And that's an easy one once you know what to look for.
Mm-hmm.
So please, everyone who's listening, go back and re-listen to what Matt was saying, because that's everything. It really is. Okay, so now that we've got that, so now you've got your one, you had your positive divergence, you got into it. Now let's assume it's one that doesn't fail, because you're right. You have the whole Beastie Boys sabotage that will happen with like the
Yeah.
earnings gap downs and things. But
Yeah.
let's just say that doesn't happen. Now you're in it and you're trying to ride, and you're in the perfect world where you've had that leader early on. What are your signals to sell it, into sell it, however, into strength
Mm-hmm.
or defensively, and also to hold it, because it's a little different, like rules for holding and rules for selling. So what are yours for that?
So that's one thing that like I heard Bill talk about that I never heard anyone talk about, was like holding times, like putting a time on things,
Hmm.
which is I find really helpful because with the leaders, they're always going to be overbought. I mean, the definition of a leader is it's overbought. It's doing
Hmm.
better than the market. It's extended. It's going to stay that way, So I forget what Bill put in, but just through like studying Bill's charts and his stuff, like the rule I eventually made for
It was
myself.
8 weeks. If a stock went up 20% within 3 weeks,
Mhm.
and that came out of Certainty from 1961, where he messed it up, and then he used it. He basically recognized that if a stock goes up 20% out of a base, just to keep it simple,
Mhm.
within 15 days or 3 weeks, to hold it for 8 weeks. That was one of his time elements. And back in the day, in the 60s, there was a short-term capital gains of 6 months. So when he would be buying something out of, and that's how he sold Syntex, because he sold it 6 months in one day. It had nothing to do with the
Mhm.
chart. It had to do with, now the short-term capital gains allowed him to get a long-term capital gain at 6 months in a day. And it happened to coincide with literally like a day off of the top. And those were his two time-based
Okay.
elements. But how do you use the time? What do you like to use
So
that
I
for?
do it a little bit different because like
Okay.
just like my general process. So I use a similar like even though I don't buy like the breakouts of bases in the same way because I don't like buying breakouts because of failure rate, my own personal thing.
Hmm.
For me, that what I like about that is that's an objective way to tell when the trend is starting. You know what I mean? Because or else, how else do you pinpoint where do you start? So even if it's a chop, it'll eventually get going, and so that's where I know to kind of start the clock. So for me, like the best stocks won't put in a climax top within 16 weeks or about 4 months from the breakout. So when looking at my own portfolio, um, if I let's say I'm looking, I have you know when you have the leader or one of the leaders, it's like I'm not going to be looking for a climax top for at least 16 weeks. Like so, it's working, the cushion's building. My mindset should be how do I get more money into the stock within the first 16 weeks of that advance? And then ideally, whenever there's short-term market extensions, if you're feeling a little bit nervous, the ideal thing to do is sell the more laggard stocks, because you want to get offload those into strength and even little bumps, because then the pullbacks don't feel as disastrous when things have normal pullbacks. So in terms of selling is basically, let's say you have 100% invested and 50% that you think is leadership, 50% is subpar or, just like average. You want to sell like 30 to 40 of that bottom tier into strength. And then as things settle, ideally you'd put more back into that leader on a 21 or a 50, or as you start to build back into a next wave up. After that 16 weeks, then it's like, you want to sit through a big base or not. Like, I find it hard. If it's one stock, maybe like, and it's not too big of a position, I can kind of wing it. Like GEV last year had a beautiful like flat base in 2024, and I just kind of sat with it while other things were moving ahead anyways. And so that was easy to sit through. But generally, if the market is like showing signs of like big distribution, and like I can't sit through like, multiple stocks doing 30% pullbacks with margin, it's like, I'll blow myself up. So I tend to, after that 3 to 5 months, start to sniff out like, where's the best way. And I never get it all right. There's always gonna be some stocks I never,
You
it's a
don't
hard
get it
time to
all
go to.
right? I thought there
I
was
mean,
somebody out there that got it all right.
on Twitter, there's many guys who
Oh
have it all
yeah,
right.
all of them get it all right
All of
all
them,
the
all of
time.
them. Yeah, yeah. You always tell someone who never trade professionally is that they're so exact about their opinions. Like it's a certainty. It's not an opinion. But so I always end up taking a beating somewhere where I eventually go to cash, because then some drawdown comes in. But I actively, psychologically, after 16 weeks, try to find climax tops to sell. And what I've been doing lately is, if the stock's extended, I'll buy some puts slightly out of the money. So if there's a hard sudden break or gap down, like a Fastly or an earnings report, that'll just naturally take me out of the stock anyways, and I won't get the big drawdown. So I noticed if you look to buy protection, like you said, like not when the house is burnt,
Yeah.
but like before there's any signs of trouble, but you as a tactician sense that we're extended, like the VIX is down to 10 or 9 and the stock's having a big up day, like some protection out of the money is probably pretty inexpensive. And I like to do it that way, because then it's psychologically, it's not like, oh, I'm selling this leader and it goes up another 30% without me. It's like, if it does keep going, I just lost some money on an out of money put. But if it does break, I have that protection. So
That is something that I should do. I know so many people who do that, and Bill was just so opposed to that I just kind of didn't investigate that. But I do think that's.
But like I feel like from the era, from like Bill's days to now, like there weren't like, because of, I forget what the rule is called, but there weren't all the earnings gap downs,
Reg FD.
Yeah. And now when there are gap downs, things are so exaggerated by HFT and algos to push moment. I mean, we look at weekly charts on all of Bill's charts and all, but like, even knowing from when I was a market maker without algos to now, to see how different the reaction is to things, it's a bit of a different world, like in terms of
Absolutely.
the speed and the intensity. It's the speed of how things happen. Like I forget, there was one Larry Connors. He has a lot of good swing trading books. With Linda Raschke had a book called Street Smarts and the rest. And I remember him saying, like in the 90s, he had a Bloomberg terminal. It's like he would get good news, like buy the stock in like a week or two, when it hit all the newspapers, he would sell it. Like it was like a 1 or 2 week lag before news.
Now
Like now it's like
a millisecond lag.
Like it's a different, and the intensity that it's so fast, it's so big. So it's, I don't know. I try and find ways to. I was a real like purist, but then I just realized with time, like things, like, you want to stick to the core principles of like the teachings, and then I try and adjust for how I think is the best way to live with current markets.
Well, I think that's the right way to do it, because so many people think they're being a purist, and they'll read Bill's stuff and then be like, "Oh, well, Bill said this." Well, no, Bill wrote that one day, and that's what he thought at that point. But you know what? Lots of the things would morph and change after he wrote it or after he said it. And it took me a while to figure that out, because and he was always changing and always evolving, because I know if you went back and looked at yourself in '08 versus how you were in 11 versus 20, how you were in 20, and then how you were in 21, like each time you're kind of like, it's like a band, like they come out with their first album and it is what it is, and then second album always kind of sucks for the most part, and then then eventually they hit their stride again. And it's the same thing with traders. You go through you're evolving and learning, and you have different experiences, and I love hearing what you're saying. And in that 16 weeks is so funny because Bill would use 18 weeks, for
Mhm.
so it's in the same ballpark, and for the looking for climaxes, and the whole concept that was the same as what you're talking about is like when you're buying something out of an early stage base, give it time to bake. And that's something he was great at. No one was better
Mhm.
at letting these things just run. And there's a difference between climax action and a climax top. And a climax
Mhm.
top is something that happens later in a move, but you can have a climax action 3-4 weeks after its first breakout. It's just a different
Well,
animal.
that's an interesting. I was talking with a friend recently, and I was saying context is so important because if you look at the criteria of a climax top and like I don't know if it's David Ryan's ants or just breakaway moves, like there's so much overlap. Like it's the context of whether you like it's climax action if you're very extended, but breaking away is deemed to be strength. So like the context of where stuff happens is very very important. And also in terms of the time, it's interesting. Like obviously I was incredibly influenced by Bill O'Neill. I've studied him like my whole career, but I've noticed even like when I was trading the gold stocks and taking different trades, there's something about that 3 to 5 months of where like even in industries, and it could be junior gold stocks, it could be fully integrated oil stock. Like there's those 3 to 5 where it's almost like that's the amount of time it takes for everyone to get on board with an idea and fully price it in, and then it goes to sleep for a while. Like I've seen it so relentlessly over and over in different industries at different times with like a similar look that just to me it's just like one of the I don't know it's one like I don't have statistical evidence to kind of say it. I never went into that detail about it, but that 3 to 5 months in terms of like strong up legs, if you catch it, it's
Mhm.
great. Like that's just a repetitive thing I've noticed for so many years.
No, I think it's. I think the answer is somewhere in that ballpark, of time,
Mhm.
and that is something that is different than how it used to be. And the Reg FD, as you mentioned, was really changed the market mechanics. I mean, that the algos, high frequency trading, commissions being free, big
Mhm.
deal. The spreads getting smaller, dramatically smaller versus what it was back in the day, and of course all the ETFs and the leveraged, and now the option market being daily. Like
Yeah.
market mechanics have changed dramatically. Human fear, greed, hope is always going to be there, but now a computer doesn't have that same
Yeah.
fear and greed, and the programmers who programmed it in do have that, but it is a different animal now. But anyways, what advice would you give to somebody? I'm going to ask you for advice for someone who's brand new, advice for someone who's been kind of like a beginner, right?
Mhm.
Someone who's then intermediate, maybe like they're on year 2 to 4 of trading, and then a veteran who's been doing it for decades. What advice would you give to each group? Let's start off with the new person to trading. What are the best things or best thing for them to work on?
Um, One is I think Bill's rule of like cutting your losses is like the hallmark rule you have to have. So one advice I'd give, because they're probably going to hear that and they're obviously going to be looking for buy patterns because that's like the first thing anyone will naturally just want to figure out. But I would say like structure this like as if you're starting a business in terms of um, you needed the whole process. Like don't like try. I mean, you're always gonna like test the market a little bit. Like one, it's okay. So there's a few things. Like I wasn't prepared for this question, but like one is
I'm
you
sorry,
know
brother.
the fake money trading doesn't do a whole lot. Like it does a little bit, but it gives an artificial view of
I
what's
think
going
it
to be.
hurts
So
more than it helps, frankly.
yeah, probably an artificial excitement. But two, when you get through it, try and find a resource, somebody who's done this, where they're not just talking about the stock is the best stock in the world, but they talk about risk management, they talk about portfolio management. Try and understand the full circle of the tools you need to run this business. Like it would be as if like if you tried to open a shoe store and you only thought about how I'm going to price these shoes and like nothing about hiring people or rent or supply chain or logistics. Like, yeah, if you don't sell shoes, you won't make money. But if you don't have the rest, you're not going to have a business for very long. So try and think of trading as a business and all the different tools you need to have. That would be like, so yes, you have to cut your losses. Yes, you need your buy signals, but try and start to visualize all the elements you need to be a well-rounded trader or investor. That's
And
what I
what
would
would
give.
those be? Do like the not every last one of them, but what would the main tools be in your mind?
So you need obviously your different buy tools, but that you can have one favorite one. You don't even have to have many to start off. So you're this is the pattern that you understand well, and you're gonna use it, and you know when you need to exit this position. So you need your stop loss. Then I would say the other really key rule two other things. One is when you're gonna sell, and if you're a swing trader and you're just taking short term profits, that's fine. But know what your goal is for the trade you go into. If you're just going to be swing trading, that's good. That's you're trying to do this over and over again. If it's a position trader, know what a successful position trade will look like. Like I said, mine is that 3 to 5 month move. That's a successful type of trade. So that'd be critical. And then two, you need a way, and this is like the biggest point of failure, and that I've spent so much time working on, is you need a way to identify when is the right time to apply to run this business. So if you're a swing
Hmm.
trader, you have to know, is this a time to be very active, to be a little bit slower, or not active at all? Same with position trading. Is this a time to be holding many positions? What's your exposure? Because swing trading could work just well, but if you get caught in a choppy market and you overtrade, you will give back 2 years of profits as the market just goes nowhere for 3 months.
Yeah, that's
You know?
true. Been there, done that.
Yeah, exactly. So having a way to objectively, and it's hard because this is a more advanced thing, but this is why most novices fail, is that they don't have an objective way to tell when to be in the market, when to be out, or how aggressive to be. So I use like net highs, net lows as my base tool to figure that out, kind of thing. And it's like a simple objective way to figure that out.
Cool. Okay. So now let's say you're the person, you've been doing it, 3, 4 years, you've made all the basic mistakes and everything.
Yeah.
You know those things that you were saying, you've got the tools, but you're at a plateau and you're just trying to get to the next level and you don't know where to look for that. What would your advice to that person be?
So what I would do is I would, and this helped me a lot, is like write out your process like a manual, almost as if
Hmm.
like you were going to raise money or as if you're going to teach somebody else. And then so dissect all the elements of your process. This is how I buy. This is how I sell. This is how I position size. This is how I determine the environment or whatever it is. And then after, figure out what is your weakest points. Like I say, like I'm great at buying. I just by selling's awful. I need better tools or better. And then take 6 months and just work on refining that one point. And maybe it could be I'm good at buying, but I'm not great at figuring out like which are going to be the hot stocks. Okay, how do I figure out which of the hot stocks are going to be? Is it relative strength? Is it the volume surges? Like try and like say like, okay, this is my process. This is so I know how I'm going to run things. And then where are like my weak spots that I want to improve? And then spend 3 to 6 months of like a deep dive of just like trying to bring that up to speed with the other parts of your game. Oh, that's the next step I would do.
Well, that is really I like that a lot, and I think that is what everyone should do. Even a new person actually would probably benefit a tremendous amount from doing it that way. I love how you explain that. So now you're giving advice on someone who's maybe been trading 20 years longer than you. Like
Mhm.
a true veteran, longer than I've been trading, and but super bright guy, you figured out things. What edge could you like pass on to them of like, hey, did you ever try this? What would be that thing, or to investigate? Or maybe it could be like, what's on your to-do list of, I really want to research how to get better at this. So what is that, like that stretch goal for the really truly advanced person? And it could just be something that you've been really wanting to study or something.
Mhm.
What you know
It's something I always keep working on, is how do I narrow down each cycle, which is really the leading stock? Like what's the best way to do that as early as possible? And then to be able to have conviction in that play to hold it for that 3 to 5. To me, that is the ultimate goal. If you can find the leaders and hold it to 3 to 5 months and then do that repetitively over a few years, like that's for this kind of position training, to me, that's the best way you can get monster returns. It would be just how to narrow that down better, because there's always like it's like it's always the same, but it's always different. You know what I mean?
Mhm.
So it's
Yeah.
like it's like I know enough. Like I've been doing a lot. Like I know who could be the basket of stocks, but then after like narrowing it down further, it gets difficult. Like to really always kind of nail the right ones, which maybe was always, from what I hear, it's always was one of Bill's strengths, but
Oh, it was like he had this uncanny thing of being able to figure out what that leader was early
mhm,
on, and it was this intangible that he had, because it wasn't, oh, the composite rating is this or the
yeah,
RS is this, or even the stuff that we were talking about before with the positive divergence, which was a big part of it. It was like the whole package. It was, it was a lot of sponsorship work. It was what was the monthly chart like, a lot of fundamentals, but not the fundamentals that most folks out on the street would be looking at. It
mhm,
was like earnings line stability, inflection. A lot of it was, if you had 3 quarters in a row of earnings acceleration and sales accelerate, like all these little things, or other ones that would be like a high return on equity. There wasn't, if there was one easy thing, I would just write one list and be like, okay, well, this is going to be the leader. And I would ask him about it, and folks would ask him about it, and he could never verbalize it, but I would just see him figure it out. I was like, dude, he did it again, man. It was just,
yeah,
that's what made him special. What I just jotted down a note to ask you, because you said you didn't
mhm,
like buying breakouts, and so I think everyone watching is probably being like, okay, and I get it, because so many breakouts
yeah,
fail. I did a massive study on it, and 40, roughly 40 to 44% of the bases will work out. So
mhm,
that means more than 50% of them fail. So you're absolutely right. And that's a
yeah.
massive sample set. So how do you like to get in? I like upside reversals myself, but what's your like go-to?
So there's a couple of go-tos. Like for me, it's as if you're figuring out this may be a leader because of the, let's say, the divergence, relative strength, or whatnot. So during those calm periods where there's like that volatility compression, like I have like small like breakaway out of volatility compression patterns that I'll do. One's called like a mini coil. So like ideally, I already have a position as we get through the breakout. So it's
Hmm.
like I like to lose like 3% on a trade, not seven
Hmm.
and a half. So
Yeah,
maybe like,
makes
so
sense.
my failure rate's probably much higher than that, than what you studied, because I don't know what your threshold of failure was, but I don't like to go to
It
seven
was,
and a half.
yeah, I used 7% from the pivot.
Yeah. So obviously, if you bring that down to 3.5 or 4, it's going
Yeah.
to be like probably twice as bad, which is ends up being a lot of failure.
Yeah.
And so I like to usually start there as an initial. And if I miss that, one of the ways I like this, most stocks you'll notice they'll break out and then they'll have that quick shake, and they'll usually touch like a 21-day EMA or a 20 EMA. I call that the failed breakout pullback. And looking back at my losing trades, it's like, I'd always end up selling it on this 21, and then it would take off without me. So I said, like, let's re-engineer this and like actually buy down there. So like I kind of just stopped buying breakouts. I figured either I'll buy before I'll get the breakout, or post breakout, it'll usually again just pause a little bit or give me like some kind of a short-term pattern that I'll use, and I'll do it. So I just really like to avoid buying above a prior high. Like it's gotten to the point where I have like some kind of PTSD of buying above a well-defined high. I feel like every algo in the world sees that. It's the
Yeah.
easiest line in the sand to look for, and there's gonna be massive volatility the second I buy it. So I try and buy before, either on a pullback or on the first pause afterwards. And a really good trade is I'll be able to get all three of those and have a full position, and then it goes without much stress. But it's not always so easy, of course. But that's how I like to do it. And I think that goes back to like the market making days, where it's finding kind of the hidden patterns, the less obvious, and the shorter term, the tighter risks where I can find them.
Well, I love that answer, and that's super cool. I want to share. Whoops. All right, hold on a second.
Sure.
I went to your website. I was going to share it, and I didn't realize that there was music on it. Let me.
Oh, maybe you went on the course page. Okay, it's
Yeah,
possible.
I did. I went on the online
Okay.
course. Hold on. I was like, that was
Uh,
pretty loud. Okay, so I just want to share this so folks can know where to go, because right now you're just listed as Matt. Obviously, when they watch it, they'll know who, because they'll
sure.
have it there. But why don't you tell me on the site where the best place to go that doesn't have music, or
There's if you go to services at the top,
okay,
you'll see there's the pro membership. Really the core of what we do. That's like
so yeah, tell
basically.
folks what that is.
So this is I kind of sat back, and it was maybe a little bit ambitious at the time, but like after the competition and I did a course and everyone loved the course. They're like, well, man, we like the course, but like, what do you do day to day? So I said, okay, if I could recreate what I learned on a trading desk, having like day to day contact with somebody, having like the whole process of like not just buy signals, but like why we're buying, what's the macro backdrop, how much exposure should I have? Like this basically recreates my entire process, but like in an easy to follow way. So people who want to kind of do growth investing, but want to have a whole process, this is what we do. We do video calls twice a week. We have end of day updates. So we have a Discord for like intraday chats. We do once a month mentorship calls. We do a lot of stuff. It's like it's
Well,
become
you're
a
a
really
busy
nice.
dude, man. That's a lot. That is a, you offered a lot for a little bit of money, man, because that's a
I
lot.
really oversold myself
Dude,
when I planned this.
you should have either lowered the amount of stuff you're given or changed that
Yeah,
price point, because that is, I know how much work all that is that you're doing,
yeah.
and frankly, yeah, if I was doing that, I would charge a lot more.
To be
Um,
fair, I designed this before I had 3 kids, so
well,
I
there you
kind
go.
of like I kind of pigeonholed myself a little bit,
Yeah, you should
but
probably
it's
increase increase your price, but
yeah.
um, so a typical any one of those things, like, well, what would you want to highlight of like, this is your best thing, like if they're with you and on their journey and learning through the stuff that you offer, what would you say is the edge that they get from your service, that they might not get elsewhere, or that you just do, it's your best thing that you do?
Well, people like just what people like. They like having real time alerts in the Discord because it keeps them connected to the market. But if I have to say like my edge of what's different is it's hypothetical. So I know this is like educational purposes. Like I'm not, I just trade my own capital. I don't manage a fund. So, but we run all of the ideas like it's a mock portfolio.
Hmm.
So it helps people because, so like I said, some of the biggest mistakes, you're talking like a novice to a stage 2 to a stage 3. It's all that ancillary stuff. Like, is this going to be a 9%, a 10% position? Is it 3%? When do I add to it? When do I, so it really runs it like I would a portfolio. Like, and so for people who want to go beyond, like, okay, now I get what buy points are. I get like cutting my loss. This is really designed for people who already kind of get that,
Okay.
but now want to go beyond and understand like a whole structured process. Like, is this an environment where we should be invest maybe like 10 or 20%? Should we be like heavily as invested as we can be with opportunities? And like, it's really the whole process. So like, I think going through the video calls and running that all together with a spreadsheet where people can follow and track. If you want to learn the real way over 6 months, 1 year, how like a cycle comes through and how to pivot and all the rest in an objective way, it's not like gut driven. I think that's the differentiator from what most people do, where it's like just buy ideas, and which is a lot of value too. But I think where like I tried to come at this different is that angle,
I
having
love
both.
that. That's, I do think that, there's so much value in watching someone do something, as looking at it as a portfolio, whether it's a real portfolio or not. Like,
Mhm.
and this is would be my advice to folks who take any service, is don't blindly just buy what they put on. Whoever
Mhm.
this, or let's say it's the golden child of the world, it has a service out there. Don't just blindly follow it, because what you're trying to do is learn. Like,
Yeah.
if you recommend something, an exposure level, a stock, or an entry point, an exit, try to think, okay, what is Matt thinking? Like, get in your head of like, why is he doing this? He just did this other thing. Now he's
Mhm.
doing this. He just bought this, and then he got stopped out of it. Now he's buying this other thing. Why is he doing it? And try to understand, whether you're making a mistake, you're making the best trade of your life, the worst trade. Try to learn from others. And I think, that's what I did with Bill's stuff. So I did a institutional list with him, during my time there. From, I started working on that with him in 2000, and then until he retired, and we picked stocks together for this service for institutional clients. And during that, I got access to our archives of those books that he had started in the late 70s. And I would go and get like all the books from 1978 and study them for a month. And then I'd go get the ones from 79, and so on, to really learn, like, okay, what was his process here? And there were times,
Mhm.
and I saw him more from the 80s to the 90s, and the beginning of the 90s to the late 90s. And that's what folks should do with your service or any service, is just try
Yeah.
to look, because that's going to get more, you're going to learn more from like learning how to fish versus the just eating the fish, so to speak. Well, I don't do, I don't fit, I fish without hooks, but because I'm a vegetarian and all, but you get my point. So
Yeah.
I think this is great. I think it's really cheap for what you're putting out there, like, and but
Yeah.
man, more power to you. Raise that price as soon as you can, because you're a smart dude, and you're
Thank you.
worth it, frankly, in my opinion. What things, before we circle over to the music stuff, what things maybe did I not ask you that you want to explain to people or tell about yourself, or anything?
I think an interesting thing that people need to keep in mind, like I said, because we talk about the competition and all. I'm like, one, there's a struggle. Even people who are very successful have drawdowns and all the rest. And I think, like, I've seen traders more successful than me. I've seen those who have, like, who haven't, who done it awful when they start, and they leave very quickly. I think there's a couple of ways that you could think about winning about trading, which you should think about in the beginning. One is, you want to make as much money as you can, but you want to balance it with your life, which I think is important. So for me, as much as I love trading, if it was choice between trading and family, I would cancel trading. It's probably the only reason why I would stop trading. There's probably no other reason. So for me, like, being able to do all of this in a way that is conducive to having a good family and be close with everyone is really critical. So you want to think about that. And I think that's one of the pitfalls. People will love to trade and they'll maybe quit their job and try and do it, which I think is a big mistake for most people. I started trading when I was 14. I was living at home when I was trading professionally. I had like many, many years of, I got married at 29, so I'd already been trading for I don't know how many years, and I built up capital, and there's still drawdowns and all the rest. My wife understood that because I was with her since I was like 16, so she understood the ups and downs. So, like, when you think about what you're going to do, think about what your goal is, understand what the impact will be on your life, because it could be one of the most beautiful, fun things. And it could also be disastrous if you like overdo it or you sacrifice other parts, or like, the market is a business to me, but you can make it a gambling environment if you want. You know what I mean? So
Mm-hmm.
I think making it part of a full part of your life planning, maybe that'll work at a disadvantage to your final P&L. I don't know, but Livermore, I'm sure, will make more money than me, but I don't want to have the same ending as him either. So I think having like a holistic plan is a very important part of doing this for longevity. I think you can win with this in terms of making as much money as possible. And another way to win is to be able to do this as long as possible. And sometimes those are not both possible, So
Yeah.
yeah.
Well, I think, man, you said so many great things during this show, but I think that ending was the most important, because it is, looking now back, I'm going to be 74, or not 74, 54. God, not
I
74 yet.
say you're the best looking 74-year-old I've ever
I was
seen.
up to like, wow, man, I'll sell you my skin cream. The you know, as you get older, you start, and I've had some health issues that really make you think about life, and it's so important to have a balance. Bill did not have a
Yeah.
balance. I did not have a balance, and you end up, your body ends up paying for it,
Mhm.
later on, and so find that balance. And like you said, if you're if you're going to quit your job to start trading, really, you need to plan that out. And like you keep on saying, it's a business. Like, plan it like a business. Just go, okay, you can go into to 2000 to 2002 bear market, is
Yeah.
1973 to 74. You can do an 87 crash. It can be 1929 to 32 again, or '07 to '09. Or you could start off, you quit your job, and then it turns into the COVID crash,
Yeah.
and you need to be able to withstand that. So there is that path there for people to trade full time, but I think most people would do better
Yeah.
not trading full time, because most of my mistakes, I would say 90% of my mistakes, maybe higher, happen from being in front of it during the trading day. Because
Yeah.
back in the day when I was in our research department, or the research department at Juan, I couldn't watch it during the day. And that was from 97 to 99. I did a lot of my best trading in ways then, because I would, psychologically, it was easy because I just had buy stops for the most part, because
Yeah.
I do all the work the night before. decide what I was going to do. And I couldn't watch the wiggles and wobbles because I had a full-time gig, and we didn't
Mm-hmm.
have the internet at our desk, and we didn't have, I didn't know what was going on, and it was very difficult. But I was thinking, oh, want to be a full-time trader and sit in front of it. And that's great. You gain an edge that way, but you also could do much better with your full-time gig, whatever
Yeah.
that is. You're working at McDonald's, or you're a lawyer or a surgeon or anything in between, and just keep that money flowing in, and you're going to trade better, because when you're trading and
Mm-hmm.
that's your only income, man, it is
Tough.
very stressful.
Yeah.
Take it from both of us. It is
Yeah.
the highs aren't as good as the lows, and
Mm-hmm.
so find that
Mm-hmm.
balance. Don't go off on your own until you have enough capital set aside for that. That really, it can rain, it can pour, man, it can flood, the
Yeah.
sky is crying type of stuff. So I'm so happy for you having 3 kids. Are you guys thinking about having a fourth?
No, I think we're good at 3. I think this is what feels like a full family. You know, it's pretty.
That's a full house you got going on there.
Yeah.
That's awesome. Before I'm going to give you one more time before we switch over into music. Is there anything else that you want to say to folks from a stock trading standpoint? I feel like there was a million questions I should have asked you that I didn't. I only have 2 questions written down here, and they're both music related. So seriously, so what?
Yeah.
Anything else you want to say?
Um, I think have realistic goals. You know, like understand. Like Stanley Druckenmiller is one of the best of all time. He made 30% a year for 30 years, and this is a. I think I'm an overachiever, so I put too much pressure on myself. But like, so I'm talking from experience. Like, have reasonable expectations in mind, and that'll help also with a feeling of satisfaction when you do well, instead of always feeling like you should have more and more and more. And a lot of this game is psychology. It's like once you get past the hurdle, if you put a lot of work in reading and studying, once you get past that hurdle of that first year, 1 to 2 years, geez, the rest is like refining, and there's more work goes into psychology and self mastery than anything else, I think. So just keep that in mind, and keep working on yourself too. Yeah.
Yeah, I totally agree with that. I would say at first, like, at first you have to learn all the basics, right? You have to
Mm-hmm.
learn all the normal skill set. But then after that, it just becomes all the work that you do and all the studies that I do and you do only move your technical skills just a tiny bit forward, but it's all about the psychology, and it really is the being self-aware type of thing. And I'll tell you, like, get yourself a little, like, a blood pressure monitor thing, and take your blood pressure when you're placing a trade, and just make a note of what is it, normal, or is it above. And if it's above, you might be making a mistake. Like, you shouldn't have
Yeah.
stress when you go into a trade. Like, really, the best trades are the ones you don't even think about, you're not worried about it. It's just like, oh, this did this setup, I need to do this, or this is failing, I need to just cut it. And there's no emotion involved with it. It's the emotion that means you're normally trading too big, or at least for
Mm-hmm.
me, like, because that's my biggest weakness and my
Yeah.
biggest strength is that I can be aggressive. That's great when you should be aggressive, but it's horrible when you shouldn't be aggressive. So, find it's that being self-aware of your, not just your weaknesses. Bill would always focus on, like, what's your weaknesses and build that up. But I look at it as fix your weaknesses, but really focus in on your strengths. What are you really good at?
Mm-hmm.
And try to make that better, because you're already good at it. Like, so for you, I would say your strength is really that, so well rounded, that from the micro level, from the market making days, to the macro thing, and understanding
Mm-hmm.
things. So your skill set is so broad. I'm just really impressed with you, man. And
Thanks, man.
yeah, you're going to just do wonderful things over the decades to come, man.
Thank you.
Yeah.
And a few things that you touched on too is I think people underestimate the stress that you can get from this business. It's like,
Yeah.
I've actually got to the point where I can feel like when the cortisol is like being released in my body, like from a stress event. And like, so I used to, when I was younger and like I was doing the really crazy stuff, like I used to have a band back then, so
Oh,
this would probably be a good segue eventually
yeah.
to like music stuff. But like I used to love, like we used to practice 3 times a week, and like those 2 3 hours, there's something about playing music that would, it's one of the few things that was able to make me get out of my head and like really like physically, like emotionally, but also
Yeah.
physically calm down. So like that's why I feel like at this age with the kids, where like I'm very close to my boys, you know, and I don't like I used to, you know, even if it was a stressful day, like I would have to sleep, I would have to rest. Like I don't have that luxury now, so it's like I have to kind of tone down the trading because I physically I don't want to burn out, you know. So
Yeah.
like understanding that type of stress and all the rest, like those things, like I said, it could make a beautiful thing into like a bad thing. So like going at this at the right pace for yourself, and I think it just took us. It's a shame, like so much could be done, but then after people tend to fall into those pitfalls that ruin what could be a good thing, and they don't realize that they're doing it. So like just acknowledging that ahead of time and like managing yourself with the process is just so important.
Dude, that's so important. And you're doing the right thing by, your kids, the most important thing in the world.
Mm.
Like nothing is even remotely, even in the same universe,
Yeah.
is is um is that. And so yeah, you're making the right decision by focusing on that, on them, all three of them. And but also it's going to improve your trading, because you're right. Like the more balanced you are, the better off you'll be. And it took me a long time to figure that one out
Hmm.
of a balance. I would always spend, every free moment with my twins, but it wasn't a lot of sleep, and
Yeah.
Joe was not an easy person to work for. So it was like,
Yeah.
it was nonstop. Like in, I don't want that for anyone else, like just find that balance, go for the, now I do a walk every morning,
Hmm.
and it's really the best way to start off your day, is just do some form of exercise, or what, like you were saying with music, is like, I would always collect guitars and stuff, but never got a chance to really play, because I was like, well, I don't have time to play. I got to be
Yeah.
looking at charts or sleeping, or with my
Yeah.
kids.
Yeah.
And so now I'm trying to do that at night again, and just going, wow, this is such a good way of helping my trading, by doing, like, when you're trying to play something, it's like you're thinking about that. You're not thinking about, oh wow,
Yeah.
I have 33% in the stock, and earnings are in a week.
Yeah.
Your mind goes somewhere else. So you're right. That is a great transition. So we are going over. There are two questions, the most important questions, and the only reason why I'm doing these hangouts is because I want to know what everyone's favorite albums are. So when we were growing up, everyone would ask, what is if you're stranded on a desert island, what album or albums would you bring? There's a variation on that. For 1 year, you can only listen to, even if you're in an elevator, this music is going to be playing, right? If
Mhm.
you can't get away from it. So one live album, and then one studio album. Studio album cannot be a best of, but it can be a double album. So we're going to start with the live album. What would that be?
So this I was thinking about it. I picked this for my boys because this is their favorite band, believe it or not, 7 and 5. And I didn't put that much pressure on them to like them or not, but I'll pick Metallica S&M.
Oh my God, that is great.
They
Dude,
love they love
there's
Metallica,
one
but
of,
they like the Load and Reload albums a lot with
oh,
Master of Puppets. But
oh,
yeah,
Master of Puppets is,
yeah,
Master. No, Kill 'Em All. Did they like Kill 'Em All? The first
yeah.
album?
They like Seek and Destroy is one of their favorites.
Oh,
That's what got them into Metallica. I don't know. Like I tried to show them Zeppelin, Gun, like a Def Leppard. I showed them like all like the stuff, and like for some reason they both really like Metallica. So it's like okay, hey, why not? You know? So
oh, that's
yeah.
it's funny. I brought up Metallica today when we had we have a weekly meeting with David Ryan, and
Okay.
internal, and he was talking about how he's a beekeeper and stuff, and
Oh,
at home he's got like a bee, stuff, and we're
okay.
talking about how hard it was, and I'm like, oh hey, well, if you ever run into James from Metallica, he's big into bees, and
Oh, really?
oh yeah,
Hetfield. Okay,
yeah,
interesting.
he's deep into it. And I'm like, hey, you should talk to him. He's like, well, I don't think I'll be in those circles because I'm into that music, or something like that. But oh, I love
Yeah.
Metallica. When my son was out here last, we couldn't make it to the Metallica show, but they had Metallica was playing in the movie theater live. It was streamed live, and we
Okay.
went there, and the
Interesting.
place was packed. Man, it was so much fun. And then his second plane got delayed, and so we went, and it was because what they're doing is they're doing this tour around
That's
but
right.
around
Yeah.
the world where they're playing in the same city, but not playing the same songs, and they're doing it 2 nights there. So it's like Friday night one set of songs, Saturday or Sunday another set, and so we went to both because. At the movie theater, it was just so much fun. Like, and everyone was just rocking out. It was a blast. They are so good. I saw them with Guns N' Roses.
Oh,
Um,
in Montreal is where there was the big like
well,
disaster.
it was after that because James had his
The
hand
burn
in the
the
cat.
casket.
Yeah,
Okay, yeah.
and so he didn't. I think he played the last two songs, but yeah. So that was, man. They're so good, and the Cliff left, and I wish,
Yeah.
it's so sad what happened. James leaving, that was a huge mistake. But
Jason, you mean?
say again?
You mean Jason?
Yeah,
That's the
Jason. What
yeah.
did I say? Yeah.
You said Jason.
Oh,
He was my favorite bassist for Metallica.
oh
I think he
yeah.
was the most underappreciated, underutilized.
Right.
I think he was fantastic.
He was so, and he always seemed so happy. And now he's doing his own music, with his
Yeah.
own band and everything, and is so talented. But and Lars, there's one guy that I'd love to meet, would be Lars, man. He just,
Really?
oh yeah, Lars is just like, he's the coolest, man. He just,
Okay.
yeah, he's um but anyways, okay, Metallica. So and you're talking S&M, the first one, not the
Yeah, the first one they did. I thought it was. I remember when that came out. I thought it was so cool. It was like the way they brought in like what was the Sergio Marchionne song they walked out to there from the Good, the Bad, and the
Oh
Ugly.
yeah. That was, yeah.
Ecstasy of Gold.
Yeah,
That was
well,
fantastic. That was
they're
great.
still using that at the beginning of,
Oh, okay. Are they? Wow.
yeah, at the
Okay. Great.
beginning of,
Great.
before they start playing that's playing,
I love
and
old westerns.
yeah,
Yeah.
yeah, that
Yeah.
totally, the Good, Bad, and the Ugly. That was, those are good,
Yeah.
and all Clint Eastwood and all that stuff. Okay, so that was, you nailed it, man.
Yeah.
That one. Okay, your favorite song off of that album?
Oh, I really love the way they do Master of Puppets. Like they build
Yeah.
into it at the beginning. It's like a crescendo, and then they come. I forget what song they come from, but like there's like what's nice about that album is like all the songs are connected with the symphony in between the songs,
Yeah.
and they build it. And it's like actually I think it's like the first song after. I think it's the third song, but it's like when they finally get into the concert, it's like such a big build that comes into it. I think that's my favorite.
Yeah, I was trying to look it up to say I couldn't get there in time, but okay, totally
Yeah.
agree with you. And their master is just unbelievable. And if you ever want to hear someone ramble on as much as I do, listen to Kurt. When he does interviews, in
So Rick Beato, interview was
the
good with
Rick
Kurt.
one was so good, and
Yeah,
he was talking
yeah,
about Greenie and everything, his
yeah.
Les Paul, and I'm like, oh, there's finally someone who just babbles on as long as I do, and I'm like, I could get along with him. Okay, so that was our live album, and now your studio album. I'm just dying to know what is it?
Okay, so I'll give you a first hint. A lot
Okay.
of my early email addresses had Edge inside the address.
Oh, okay. Oh, Joshua Tree.
For me, one of the most well-rounded. It was either between Joshua Tree and Actung Baby. Like I'm a huge like early U2 fan, and I think I would have to take Joshua Tree.
Yeah.
Just
Okay.
phenomenal.
Joshua Tree. Oh, that was so good. Their early stuff, I never, it wasn't so much their older stuff. Wasn't,
It was the middle of their catalog, like that, starting from Joshua, Actung Baby, like All You Can't Leave Behind. Those were all great.
Yeah. Okay. So I'm going to pull up Joshua Tree, and then we do this little thing on here where I'm going to give you 2 or 3 songs at a time, and we are going to back into your favorite song off of that album.
Okay, so this is a tricky question because I've heard this album so many times that when you listen to an album so many times, it's like the best songs end up not being your favorite song anymore because you've heard it too many times.
Yeah. No, I get that. Well, think about it. Like Led Zeppelin 4, right? Originally, it would be Stairway, right? But then
Yeah.
after a while, it's like, no, it's not Stairway. It's anything but Stairway. Okay.
Yeah.
So this is going to be a good one. Okay. So we're going to go through, and I'm going to give you 2 at a time, and I do them in order. And you've got to pick the best. And boy, that they just stack the beginning of this album. I'm going to go from the bottom of the album up. So
So are you trying to find my favorite song, or I
your
have to give you
favorite song, but you can't tell me. But we've got to narrow it down. Okay, so Now I'll do it from the beginning because that's what we always do. Where the Streets Have No Name. Oh my God, I've got to listen to this whole album after this.
It's
Uh,
great.
I still haven't found what I'm looking for. Just between those two, which one?
Which is my favorite between
Yeah,
those two.
where the Streets Have No Name, and you can't use the video. What he's saying, because these videos are so good for both of these. That can't
Yeah,
be part of it. You're just listening to it. You're not watching it. Where the Streets Have No Name, or I still haven't found what I'm looking for.
where the streets have no name.
Okay, okay. Where are the streets? Okay, now we're going to have With or Without You, or Bullet the Blue Sky.
With or without you.
Okay, we're gonna go. You like the W's? Okay, so Running to Stand Still, Red Hill Mountain, or In God's Country.
I'm gonna go with Red Hill Mining.
Okay, Red Hill. Okay, but I know that's not going to be your favorite. So okay, now we're going to do Trip Through Your Wires, One Tree Hill, Exit, or Mother of the Disappeared.
I'm gonna go with Exit. Exit's cool.
Okay, Exit. Okay, so now we've got Where the Streets Have No Name, With or Without You, Exit, or what was it? Red Hill Mining, right?
Yeah. Yeah, that's right. Yeah.
So of those, I think I know which one it is, but you tell me which one it is.
Again, this is only because like I've heard the main one so many times.
Yeah.
So my favorite right now, I'd have to say is Red Hill Mining Town.
Really?
That's a cool song.
Well, it's a cool song, but I did not think it would be your
Hey, look, it's
favorite.
not the best song. Like I
Yeah.
like.
Okay,
It's not
what's the best song?
that's for sure. With or without you.
Yeah, that's a good one.
Like I mean, it's hard because they're so both classic, but With or Without You has such a vibe
yeah,
that like I find that song could have come out today and you'd think it's a new song.
I think so. I think you're right. And just looking at all like the Where the Streets Have No Name, I still haven't found what I'm looking for. With or Without You, Bullet, like God, they just stacked this album
It's
with
an incredible album.
stuff.
Even In God's Country is amazing.
Yeah, that
Running to
is.
there's a from the Zoo TV tour. There's a Running to Standstill version he does, just like guitar and vocals. It's phenomenal. You have to check.
Really?
And from that he goes into Where the Streets Have No Name, which is just it's like
Oh,
spellbinding.
awesome.
Yeah, like it's just a great album. Such a good album.
So
Yeah.
have you watched? I'm sure you've watched the movie with Paige and
Yeah, of course.
Ed,
It might get.
It Might Get Loud.
I have the DVD on my desk here somewhere. I used to have it. Yeah, it might get loud. Yeah.
Oh my God, that is so good. In the very beginning with who is it? The younger dude who
What's his name from White Stripes? There.
yeah, he strings the guitar with just with just a piece of wood, and then he's got like his little pickup on there, and oh my
Mhm.
God, everyone needs to go watch that.
Yeah.
And when Paige starts playing, I think it was Ramble On, in the middle of that thing, and then, or was it? Yeah, I think he showed how to play that, but it was Kashmir that he started showing,
Yeah.
right? Wasn't it Kashmir that?
I know he. I think he also played a Whole Lot of Love.
Oh yeah, I think you're right.
I think you're talking about the point where it stood out to me too, where like Edge and I forget his name. I can't remember his name. Anyway, they're both like. I mean, they're all like especially.
Yeah.
I don't know. I don't know if I'd put White Stripes dude in the same category as
No.
Edge and Page, but he was just like the new guy they had to bring on. But even Edge, like they all stop and they're just like looking at it in awe of like a Page playing this stuff.
Yes,
You know?
it was that
Cool.
it was that sense of awe. I'm looking it up right now.
Yeah.
Oh, Jack White.
That's it.
Yeah,
Jack White.
and he's
Yeah.
got that
He's
cool.
good, but he's not an Edge.
No,
and Page.
he shouldn't have been there. But have you seen his telly that he has with a 3 pickup telly, which is just weird stuff?
Jack White?
Yeah, Jack White's.
No.
It's really cool. It's neat looking. It's different. I would never buy one, but it is very unique. Well, have you seen the U2 at in Vegas yet?
No, I haven't. At the Sphere, I haven't had a chance.
I need
No.
to, if you ever go, let me know because I would go out
That would be awesome.
to see that. I mean, I saw Dead and Company there with my son last year. That was the best show ever. And then I went this year. My better half doesn't care for the Dead, so I just went solo. That was an experience. It was such a, you need to go to the Sphere, man. It's
Yeah, I'd love
life
to. I'd
changing.
love to.
It's like, well,
That'll be a fun trip. If ever you want to plan a trip and go see you too, I'm totally down.
dude, yeah, just
Yeah,
let me know, man.
yeah, yeah.
Well, that was so much fun. I want to have you back. I was going to promote the fact that you're going to be on IBD Live on July 18th, but there was a scheduling thing where we don't want to stack these, so I'm going to
Mhm.
release this, either the week after or the week after that, just so that it's not too close
Sure.
to IBD Live, because we try to keep this is a non-IBD podcast, and just try to keep it
Mhm.
separate. And wow, just wonderful. Any parting advice for folks before we peace out?
I'd say find someone that you trust to learn from. Like I found this guy, Mike Webster, years ago, and I went into California. He blew me away. I got every book, every course I could possibly. I put his
Uh,
charts on my wall,
uh,
and whenever he talks, I take notes. So find someone that you can trust, like that guy. If you could find him somewhere, if
no,
he's putting out videos.
yeah, that guy is not what he's cracked up to be, man. He's just too into music, and he rambles too much, man. Don't listen to him. Well,
Jokes aside, it's a honestly, it's an honor. I've always loved your work, Mike. Like
oh, thank
if
you.
ever there's overlap, it's because I've probably studied your stuff, you and Bill's stuff, with such detail that it's entered into my subconscious, and it's part of who I've become. But all the work you've put out has been so awesome, and it's just I still review it. I still, whenever I have a few minutes and I'm not stuck in a wrestling match with my two boys, I'll try and take out like some kind of chart book and look at it or something. But that's it's an authentic, very big authentic thank you. And
Oh, that means the world to me. I appreciate that more than you will ever realize. So thank you so much. Enjoy the time with your kids being little. I'll let you
thank
go
you,
play with your
thank you.
daughter, because I know she's like, "Where's Daddy?" Or she's not talking yet, but she's thinking, "Where's Daddy? Why is he rambling on so long?" So, with that, brother, until next time, peace out.
Absolutely. Peace out, Mike. Thank you.
Sure.